Hello and welcome to ABG Sandal Collier Investor Days. We will have 48 companies presenting over the course of 2 days. Unfortunately, today's first track one speaker from Eniro will not be able to participate, but you are welcome to tune into track 2 in the meantime, and the next presentation will begin at 10 o'clock.
Hi, and welcome to ABG Sandal Collier's Investor Days seminar. My name is Renato Rios. I am a stockbroker here at ABG. And with us today, we have EQL Pharma and its CEO, Aktier Schörling. Pharma is a pharma company listed in Stockholm, has a market cap of 1.3 billion SEK, and operates in a niche generics space. Without further ado, please, Axel, welcome.
Thank you so much, Renato. Hi, everybody. What an absolute privilege to get the morning slot here while everyone is still fresh and awake. So I'm told that we're going to get 30 minutes here together. So my plan is that we use those 30 minutes, that I do 10, 12-minute presentation about the company, and then we use majority of the time for interaction and questions. That normally makes most sense. I am here for you. So that's how we do it. For those of you who haven't met me before, my name is Aktier Schörling. I am CEO of EQL Pharma since approximately 2 years. I've been with the company for 6 years. I started as COO, then Deputy CEO, and 2 years ago I took over the full responsibility. Prior to EQL Pharma, I worked in both consulting and finance, and I have a master's degree in engineering physics and a master's degree in finance. Okay, without further ado, we look into EQL Pharma. So EQL Pharma was founded back in 2006 by serial entrepreneur Christopher Reus, who is behind companies such as Cellavision and a lot of other companies that I'm sure that you know about. We are a pharma company in Lund, but we are not the typical pharma company in Lund. What do I mean with this? I mean exactly that we have 36 marketed molecules and another 31 in our pipeline. So we are not a research company, or we are not waiting for any data to come in exactly according to our wishes in a few years' time. We have existing sales and we have a strong pipeline. We're headquartered in Lund in southern Sweden, and we have roughly 25 employees. So what does EQL Pharma do? EQL Pharma is a niche generics company. So if we separate those words and try to understand them separately, generics, this is a copy of original pharmaceutical drugs. So when an original pharmaceutical company, they do a lot of research and development, and when they feel they will have a successful candidate, they file for a patent. This patent has a certain expiry time when they can sell themselves to earn all their investment back. After this patent expires, it is legal for generics companies to launch generic alternatives to this originator, copies, basically in plain English. And the idea with this is, of course, to stimulate competition and bring the price down. Okay, so what normally happens when an interesting patent expires is that the price goes down by 98, 99% in only a couple of weeks, because 20 different generics companies, they launch at the same time. We call that sometimes the bloodbath, what happens. We, at EQL Pharma, we are not so interested in the bloodbath. So while a lot of other generics companies, they look into the future, try to understand the next big patent expiry, we instead try to look backwards in history and find forgotten old patent expiries where no generic competition at all has come, or maybe just 1 or 2 generic actors have launched for, 30 years, 40 years, 50 years. This gives us a lot of predictability, both financial predictability, but also operational predictability. So what we do, when we select what products to bring into our pipeline, it is very, very crucial for us that the products are likely to have a very low competition. Because what we have seen in our Nordic markets, when the competition is very limited, you have not a monopolic pricing mechanism, of course, but something that more resembles an oligopoly, meaning when you have up to maximum 4 competitors, it is a very predictable competition in the market. So this means we are very business focused. So this means that we have a wide range of therapeutic areas. We are not specializing in any therapeutic area. We are agnostic to therapeutic areas. And the products we have are prescription pharmacy drugs and hospital drugs. So in practice, what we do is that we spend a lot of time on business development, meaning trying to understand the market and what products fulfill these requirements. Once we have found products that we want to have, we go out in the market and see if we can license in the rights to that product, if there is already a generic dossier available. Most of the times this is not the case, so most of the time we have to develop the product from scratch. And it might sound a little bit strange, develop a copy, what is there to develop? But it's actually a lot more complicated than you would think, since it is a highly regulated business. So it takes, I would say, 3 to 5 years for us to develop a copy and have it approved in our markets. And then we manage the post-commercial phase. Of course, it's very important to do that efficiently. We have existing direct sales in the Nordic countries in our own name and with our own salespeople. Then, in addition to that, we are present in a handful of non-Nordic continental European markets where we have selected different strategic partners for us to sell. And the reason why we are not doing it ourselves is that, you know, EU is, what is it, 27 countries, something like this, and 27 completely different pharmaceutical systems. We cannot learn them all. So better be humble and understand that somebody else does it better for us. This is very short our focus on products. We have 3 segments of products. So we have retail products. These are prescription pharmacy drugs. So you get to your doctor, you get a prescription, you go to the pharmacy to pick up the product, and this is where the generic interchange happens. So I suppose most of you, at least the Swedish people, have sometime go to pick up a drug, and they say, we have something else, we have something cheaper for you here, can we take that instead? And that is the generic substitution, that is where it happens. This is roughly 80% of our sales for the time being. Second segment is hospital segment. This is for the time being only about 5% of our sales, but it's going to grow a lot in the years to come. And these are products for hospitalized patients that are much more severely ill. And whereas these are mainly, in the retail segment, are mainly tablets and capsules, the hospital drugs are mainly injectables and infusions and so on. Then we have an extremely interesting segment that we call branded. From an investor point of view, I think this is where you should see the big optionality in our company. So the background to this segment is we have 2 molecules that originally were developed as generic towards Nordic originators. So some Nordic originators selling for a certain amount of money, and we want to come in as a generic and take a part of that. And sometime into the process, we realized that these 2 therapies, they are only used in Nordics, not in continental Europe, but they should be. So then we came to the next realization, okay, what if we can establish these as original brands in continental Europe and bring these treatments to new countries? Then we have basically an originator drug at the capex profile of a generic drug. That is wonderful. So what we have done since basically 2021 is that we are selling the rights to these products to different local actors who are much better than we are at doing this. This is today only about 15% of our sales, but I have strong hopes that this will be a more significant part. Looking at some financial targets and performance, we are working, we say sometimes we're joking that we're working in Stalinistic manners in Lund, so we're working in 5-year plans. So we had one 5-year plan between 2015 and 2020 when our target was to grow on average by 30%. We over-delivered on that plan and grew by 34 or 35% in that period. Then we launched a new 5-year plan in 2020 that we soon have graduation time here on that 5-year plan. And there the target was to grow by an average of 40% per year, and we added a profitability target of 25% EBITDA margin. So this is now what we have to deliver in the remaining 12 months to come. And my growth forecast for the 12 months to come is a growth of roughly 40%, meaning that as everything is now, I think that we will deliver on this plan. What is also interesting in the year to come is that we will communicate our targets for the coming 5 years. And for those who follow our company closely, this is something what a lot of people look forward to, because it will sort of set the ambition level. At this point, I do not really know exactly what parameters we will focus on and exactly what numbers we will use, but I can promise that it will be full of ambition and growth focus. Just very shortly on how we have delivered on our targets so far, or since 2017 at least. So the red line here that you see is our sales target as communicated by the external plan on a rolling 12-month basis. And the green bars here is how we're performing versus that target. So you can see sometimes we're a little bit ahead of plan, sometimes we're a little bit behind plan, but we are more or less here on our plan. You also see some light green bars here, and what that means is basically we are coming from a very entrepreneurial background, having our founder and chairman in Christoforeus. We are in a conservative and traditional business, but we still believe that there is room for entrepreneurship and commercial new ways of thinking. So during the COVID pandemic here, we tried to boil lemonade from lemons and actually became the largest distributor of COVID tests in Nordics here for a short while. This is not our core business, but what it did was that it strengthened our cash position in a very, very nice way, such that we could keep on signing new niche generics to our portfolio. So it's a very nice way to see how you can turn a temporary cash flow into a long-term cash flow, is basically what we're trying to do. Very short here, this is just from our quarterly report where I wanted to show rough operational profitability levels, so been between sort of 40 and 30 million SEK here, EBIT for some time here. And now we hope that to see an increase there due to certain launches that will come here in the year to come, which will take us up to the level where we want to be by the end of the year, which is our graduation year. Final picture before we hand over to Renato here. Just a snapshot of our portfolio and pipeline to try and understand a little bit how we operate. So for the time being, we have 36 molecules in the market, and here you can see a little bit how our portfolio, meaning our launched products, developed over a couple of quarters here. So you can see here that in Q4, we have a broken fiscal year, so our Q4 is January, February, March, just for clarity. We launched actually 8 products. If you look on the right here on the screen, we have our pipeline broken down into 2 different ways to view it. First, in the top corner here, you can see that we have a total of 31 products here, whereof some are still in development phase. Some are in review phase, meaning that dossier is ready. We've sent it into authorities and they are reviewing. Some are in launch phase, meaning that the approval is there. We have just not launched the product yet. And on the bottom right, you can see how we expect to monetize on this pipeline in terms of time. So when the launches will actually come here throughout the coming years. I think I will stop there and hand over to Renato and, of course, all of you for questions.
Thank you, Axel. Thanks for the presentation. There are a few things that are quite important with or interesting with EQL. Maybe let's start with the income statement, the sales profile and the profitability underneath. So if you look at the growth, you have seen a nice sales growth development over the past quarters and on an annual basis as well. But the gross margin, on the other hand, has been fluctuating quite a little bit. Went from 47 or something like that to 40 in the Q2, and then up to 48, and then down to back to 40. Could you just shed some light on what your target is in general with the gross margin, maybe in the short term and the long term? And yeah, let's start there. What do you reckon?
No, so it is absolutely correct, like Renato is stating here, that our gross margins have been fluctuating in the last 12 months, and there are different reasons for that. The main reason is that we had you could say, a global antibiotics crisis here in the aftermath of the Ukrainian war, leading to worldwide shortage in antibiotics. Quite many of our products are antibiotic products, so we went stock out on 30% of our products, basically. And then we still needed to try to grow by 40%. So how could we keep growing by 40% without having access to our most important products? And they are generally high gross margin products as well. So then we needed to sell more of other products simply while waiting for antibiotics to come back into stock. So this is the main reason, I would say, for fluctuating and generally lower gross margins. Now the antibiotics inventory is much, much better. So I foresee a gradual increase in gross margins here in the quarters to come. We also have this disruption in the Red Sea, you know, where the Yemeniti rebels are attacking freight ships in the Red Sea. This has led to a sharp increase in transportation costs, and this is affecting us with several millions negatively for as long per quarter for as long as this situation will last. So that has also been tough on us. I would say in the long run, our target, or in the sort of short to mid-term, let's say 1 to 3 years, my target is to get to gross margins levels of around 50%. And we are using a functional P&L, so bear in mind, our gross margin, we are also deducting depreciations and write-downs on gross margins. So it is not just sales minus COGS. If you want to see it like that, you have to add like 5%. So by 50%, we mean like 55%. And in the longer run, I see no reason why we shouldn't be able to get up to 55, 60%, because there are still a lot of good products out there. We have been growing a lot. I think we can do a lot in you know, negotiation and COGS optimization and so on.
And I assume that part of this is also entering more branded products, right? Or finding more branded products to deploy and adequate markets to deploy these products in.
You're absolutely right. The branded products in general have a stronger gross profit profile.
Yeah. Switching to the competitive landscape, there are a few companies that do something similar to what EQL does. And could you please elaborate on how you guys at EQL differentiate yourselves from the masses? Is it like, do they look at the same things? You mentioned a little bit that you kind of look at the things that not many look at, but I imagine that there are a few that also do something similar or something very like what you do. So yeah, what is the competitive advantage that you see that EQL has versus other players in the market, and what do you think makes it could be comforting to hear for investors regarding, you know, that what makes you better at, you know, getting these licenses of drugs that actually will sell for a long time?
So if we start with the generic space in general, the absolute majority of generics companies, they have a forward-looking approach, meaning what is the next big patent expiry? Everyone wants to go for the blockbusters. So there you have excluded, and we don't do that. So there we have excluded, you know, 95% of competition already, you could say. There are a few companies in the Nordics who have sort of realized the same thing that we have, meaning that with these old, forgotten products, you can have a very nice sales tail and very nice price point if it's up to 4 competitors. This is more or less our realization. But none of the ones, I would say that two or maybe 3 actors are doing something similar, but none of them are doing anything identical. For example, we have Orifarm Generics. It's a huge Danish pharmaceutical company. They turn over something like 15 billion Danish at this point, focusing on parallel import. They had a couple of years where they focused on generics, and they did it really well back in maybe 2015. So we have them now as competitors on quite many products. We have seen a shift in strategy with Orifarm, so they are more or less doing other things. So I'm not super worried about them. Then we have also we have one company here in Stockholm, Evolan, which are doing a fantastic job. They're a private company, but they're also not doing exactly what we are doing. They are more focused on acquisitions, more focused on license deals, whereas we try to focus a little more on developing the dossiers ourselves. And I mean, it's a bit of a joke, but some seriousity to it as well. We are a little bit of bottom feeders, you could say, when it comes to these generics. So products in the segment of 500,000 euros up to, let's say, 3 million euros. This is a perfect segment for us because the huge generics companies, they don't bother in this segment. It's too little money for them. So here we can sort of be left alone. to operate. And if the market is too big, we just see it will be a magnet for competition. And the most important thing for us is keep the competition limited. That brings the stability.
And just in that context, what type of, what is the optimal life length of a drug? And does it come at the cost of margin, of gross margin? Maybe a product that has a longer life carries with it a lower margin. Am I thinking correctly there?
So this is a super critical question when understanding EQL. So if we start with the lifespan of the product, so what we focus on are products where the patent expired long ago. Where we have lots of products where patent expired in the 1950s, the 1960s, and so on. And then, of course, when patent expires, there is little decrease in sales initially, but we have decades of sales data to study, and these products are, in pharma language, they are called legacy products. They don't grow, or they grow with demography, you could say. They grow 2-3%, like the population, but they also don't decrease in sales. So this means coming back to our segments here, I always make the example of we build a company like you build a brick wall. So if you take the first two segments here, they are nice products with a stable gross profit, and the target is more or less that they will outlive us all, because these products, they have been selling in the Nordic market for 60 years, 70 years. You know, we have Covepenin, Atarax, products like this that the doctors, they have it it's in their hand to prescribe it, and it's not gonna stop. So this is the most important thing for us. And you know, when you build a brick wall, you put the stone. It takes time to build the wall, but once you put the stone there, it will remain there. So this is how we're trying to build a company with sort of a brick wall of eternal cash flows. And then we're adding a little bit of let's say, sugar on the top here with the branded products. There is not necessarily a trade-off, I would say, in lifespan of a product and gross margin. But for us, if a product has an expected lifetime of 5 years, that is way too short for us, then we will not do it. And that is also interesting if you are more into the sort of accounting part of investing when looking in our intangible assets. So whenever we develop products, we capitalize and we build our intangible assets. And we are super picky with what we do. So everything what is there are products that fulfill our very strict criteria. Products that we believe will be selling and outlive us all.
And where does Mellozzan fit in that picture? Well, one thing, how has the sales of that, the development of that drug been, and where does it fall in this? Is it a drug with a long life?
So Mellozzan is here in the branded segment. So it is not one of these legacy products that has been selling forever and ever. So it is, you could say, a little bit of an odd animal in our portfolio. Mellozzan is one of these products that we developed as a generic to a melatonin-based product, you can say, that's been selling in Sweden for about 20 years. We have launched it already in Sweden, and we're selling for 2 million euro or something like that, with quite good margins. The big thing for Mellozzan is that children and adolescents with ADHD who also suffer from insomnia, which are basically all of them, because if you have ADHD, you generally have quite an active brain, and thereby you have difficulties falling asleep. In continental Europe, there is no pharmaceutical product for them. So now we are launching Mellozzan together with the best ADHD companies per geography. And we have just launched in Germany, Austria, actually, here just a few weeks ago. And Germany is one of the markets where I'm not going to say I prognose a huge sales development, because that would be promising too much. But I'm very hopeful, because here we are just entering an already existing market. So here in the retail and hospital segment, it's quite easy for us to forecast. When launching an entirely new product in a new territory, it's about changing a behavior. You need to inform all the doctors. You need to make the parents of the ADHD children comfortable with giving them a sleeping pill. This can be something stigmatizing as well. So we're hoping that we have selected the best partners who will make it a big success. But just as an example, Sweden is a demography of about 10 million people. And the originator in Sweden managed to build a market of 40 million euros based on these 10 million people only. So if we think of the fact that Germany is 10 times bigger than Sweden and do a little bit of math, you can at least realize that the potential is big.
Right. Yeah, exciting time for Mellosan. Switching to capital needs. Let's talk maybe a little bit about M&A and capital expenditures in general. For both growth and expansion, do you think that you need M&A? You haven't been very active in that area, but I wonder if that is something that you would like to tap moving forward as to realize some more growth.
You're absolutely right, Renato. So my view, our view on growth, how we're growing this company, is that we have to take responsibility of our own growth, organic growth, and we do that by always adding new products to our pipeline. So without a single M&A, I am able to promise a good growth development and feel that I really have the products to support that. M&A, I view like a sugar on top for us. We do it when we find good things at good multiples. That's when we do it. And we have actually done, you could say, smaller asset deals. You could say we did actually one in the autumn where we're launching some products here now in the springtime. We are quite active in looking for targets, but we are also very, very picky also when it comes to M&As. So that's how I view that. And when it comes to the capital need, I would say that the way I do the liquidity planning is more or less, I mean, we are a growth company. We want to grow. If you want a dividend company, I suggest look elsewhere. We want to reinvest the profit we make into the business. We have lots of good ideas, and we think we can keep growing. So this means that when I do the liquidity planning, I always try to plan it such that more or less all free cash flow that is available, with little buffer, of course, is reinvested into the business so that we can keep growing. And let's see how long we can do that. And when it comes to M&A, like I said, we are constantly looking. By the way, if somebody knows of something good, please just give me a call. So we would not see in this moment an equity financing of that. So there is no equity need in Equal. That is also very interesting to know. So no new issues, inga nyemissioner. So a potential larger acquisition would be more or less debt financed.
When you look at things to acquire, do you look at what type of companies would that be? Would it be distribution companies? Would it be some company that has a client network that it's interesting to you? Where do you find that sweet spot?
So when we go hunting for acquisitions, we basically hunt for, you could say, to simplify it, two different types of animals. Asset deals, and it's quite common in pharma. And what you do then is you just buy a product or a portfolio of products from a competitor and lift it right into your business. That's beautiful in the sense that you get an instantaneous growth, right? You just get the sales right into your books, and you already have the OPEX platform in place. We already have all the infrastructure in place to manage such a portfolio, so it will not drive any additional cost. That's on the upside. On the downside, it will only give you growth for 4 quarters because the products are not growing. So when you compare quarters, it will give you growth for 4 quarters. It is nice, but we want long-term growth. So upside and downside with asset acquisition. We're also looking for companies to buy. And then we're generally looking for companies which are active in a geography that we don't know so well. So they would bring in expertise in a new geography or some functional area, something very close to what we are doing, but not exactly. Some company that's understood something what we have not really understood that we can learn from and add another growth derivative.
Interesting. Going back to the sales figures, how do you, when you look at this, so you have a pipe of how many drugs are that you still have in pipe for the remainder of the year? You say like 3, I think, right? You still have drugs that are coming to the market this year.
So the plan this year, and bear in mind that our year starts 1st of April, so it's a little confusing. But the year that starts with 1st of April, we plan to launch in total 7 new products.
Right. When you look at these products, I am assuming that you also factor in some level of sales that you want to achieve. Could you maybe just elaborate very shortly about that?
Yeah. So our current 12-month sales is roughly 265 million SEK. We have to go to 365 million SEK in 12 months to be able to deliver on our 5-year plan. This means that we need to add 100 million. That is quite much. How are we going to do that? So we're going to do that by what Renato just said, these 7 products that we're going to launch during the year. They will add on sales and close a part of that gap on 100 million. Secondly, we launched 8 new products in the quarter 4. Going in now to the year, we have full sales effect of those products. They will close another large part of that gap. Finally, we had quite many stockouts in the last year due to this antibiotics crisis. I foresee a much, much more stable supply chain in this year, so fewer stockouts.
All right, Axel, thank you very much for the presentation. That is all for now. Thanks.
Välkomna tillbaka. Mitt namn är Sten Gustafsson. Jag jobbar som healthcare-analytiker på ABG Sundal Collier. Och jag kommer moderera nästa presentation som kommer vara på engelska. I'm happy to introduce our next speaker. We actually have two representatives from the company here today. The newly appointed CEO Torben, and we also have Holger, the CFO here from Bull Diagnostics. So please go ahead. We'll do the Q&A afterwards.
Thank you, Sten. Good morning, everybody. Thank you for being here. I'm excited to be here. I've been looking forward to come here and present Bull Diagnostics to hopefully future investors. As Sten alluded to, I'm new CEO of Bull Diagnostics since April 16th this year. So I thought before going into the actual presentation, it would be meaningful for me just to give a brief introduction to myself. I'm Danish, and I bring with me more than 20 years of leadership experience within diagnostics. Most of my leadership experience comes from working with the Danaher Corporation and operating companies within Danaher Corporation. Most renowned would be Radiometer Medical, which is the world leader in point-of-care blood gas testing. But I've also spent time in the dental industry and other industries. For those of you that are familiar with Danaher, you would know that this is a company that's really excelled in bringing lean into practice, and a company that's been very successful in building up a culture of continuous improvement and operational excellence. And I intend to bring those learnings, those skills with me into this job at Bull Diagnostics as the new CEO. I'm really excited about this opportunity. I understand the work we had ahead of us here at Bull. Bull is a great company with a great team, with a great following in the market. And I believe that Bull holds a lot of opportunity for creating value for all stakeholders. So I hope that as we conclude this presentation that you will have the same feeling as I do. So why Bull? What makes Bull an attractive company? Well, Bull is a global niche player in decentralized hematology. Hematology is about doing a blood test where we do a CBC, a complete blood count, where we can screen and we can diagnose different diseases, but also infection. It's a routine test. So it's a test that's required to be done all over the world. At Bull, we provide quality solutions both for the human segment, but also for the veterinary segment. And we have, on top of that, a unique capability of producing our own reagents and controls, but also doing that not only for ourselves, but also for major IVD companies in the industry. We have a robust business model. It's a razor blade model. We place instruments, and the instruments, they consume consumables over the lifetime of the instrument. And that creates for us a robust recurring revenue. Right now, we're exploring a lot of expansion opportunities. On one side, we are building a pipeline of OEM opportunities, taking advantage of that unique capability that we have. We're also going live with licensed manufacturing of reagents and instruments with our licensed partner in India, as an attempt to open up this market, which is a huge market growing very rapidly and giving us an opportunity to take advantage of this political initiative about Made in India. We're investing in our distribution channels. We're adding channel partners in Africa and Middle East to fuel our growth. And we're doubling down on the veterinary market. Last year, we added a product to our portfolio, and we also began a channel partner agreement with Fujifilm in Europe, which we have expanded further this year, and we're seeing good traction there. Finally, we are focused on bringing innovation to the market. We are right now finalizing our new platform, the BM900 platform, and getting ready to launch a new product based on that platform, the BM950. If we look at the hematology market, it can really be separated into two parts. The core part is the human part of the market. This is a market that's estimated around 8 billion Swedish crowns. It's growing low single digits. It's a market that's really determined on the clinical practice and the market maturity. The market typically is split between 3 parts and 5 parts instruments. And it's characterized by benchtop analyzers that are placed in small rural hospitals, outplacement centers, physicians' offices, where the test is taken at the time of diagnosis. 1/4 of this market, roughly 20 to 25% of this market, is the 3-part market. And this is where Boule holds a really strong position. And historically, we've been supplying the 3-part markets with high-quality instrumentation for decades. We have a very strong market recognition there. And we have a very loyal following. The 3-part market, however, is flat to declining. And more of the users are moving towards the 5-part, which is a more complex but also more costly technology. With our new platform, the BM900 platform, and with the launch of our new BM950 instrument, we believe that we are strategically positioned really well to take advantage of this transition from the 3-part segment to the 5-part segment in the market. If we look a little closer at the new instrument, the BM950, it's really an instrument that is built on the legacy of Boule. We take what we do really, really well, building instruments that are high quality and very robust, and then we add new technology and new value adds to it. And the BM950 is a good example of that. It's really, for us, a leapfrog in our portfolio, and we believe that this will unlock a lot of market potential for us and help fuel our growth going forward. We expect to submit for regulatory in 2025 and commercialize in our main markets in 2026. However, once the product has gone through evaluation, we can effectively go into markets outside CE and FDA. The other side of the decentralized hematology market is the vet market. And this is a really interesting space. Although much smaller, valued around 2.6 billion Swedish crowns, it's growing much faster. It's growing high single digits, and it's a market where we are well positioned. As I said, we launched a new product last year, Q2, which complements our portfolio now. Now we have a portfolio that is competitive, and combined with the fact that we have a very strong channel partner agreement with Fujifilm in Europe, and the fact that the regulatory requirements for bringing technology into the vet market are much lower than in the human space, we can really take this portfolio global. And this is what we are focusing on in the quarters to come. Looking holistically at Boule, we are a quality provider of a full hematology value chain. We have, to the left, you can see that we have a suite of products that covers both the human and the vet side. We have the capability of designing, manufacturing our own consumables, reagents, calibrators, and controls. And we also have the capability of doing that for our OEM partners. We can supply our channel partners with continuous education, and we can train our end users with the Boule Academy. And we have a vast service network through our distribution channels, so we can deliver really, really high quality service to our customers. We're a global company. We are positioned strategically really well. We have 7 sales offices around the globe. All of those sales offices are positioned in those markets where we see the most potential. By doing so, we can stay very close to our customer base and to our channel partners. It gives us instant feedback about customer needs and regulatory changes, etc. We have 4 manufacturing sites, 3 that are controlled directly by us. And then we have our new licensed manufacturing site in India. And we leverage roughly 200 channel partners. Although you need to look at this from an 80-20% perspective, roughly 20% of our channel partners carry 80% of our total revenue, excluding our OEM business. If you look at our business model, it is an indirect one. And we are balanced well geographically. You have to look at the US, including our OEM business. But if we exclude our OEM business, we have a good balance between Americas, EMEA, and the rest of the world. It is a razor blade model. If you look at the graph in the middle here, you can see the correlation between instruments at the bottom. As the instrument sales grow, as our install base grow, you can see that the consumables correlate really well with that. So for us, it's really a matter of just focusing on growing our install base of instruments. And that makes for a really robust revenue stream. It's a recurring model that gives us quite an advantage. And then finally, we leverage a multi-brand strategy. In the human side, we have two brands. We have Swelab and we have Medonic. And the reason why we do that is that it allows us to operate with two channel partners in the same country with different strategies, giving us better coverage, better execution. Historically, coming out of COVID, we have seen sequential quarterly growth in sales, which has been really good. And in fact, if we look at Q1 was an all-time high in terms of sales. We closed at 576 million Swedish crowns. So we've seen some stability coming out of COVID in our business. If we go a little bit deeper and look at the instruments and consumables sales historically, you can see the same pattern. You can see the correlation between the instrument sales, which is the red line, and you can see the consumable sales, which is the gray line. In Q1 of 2024, we sold roughly 1,400 instruments, which was a really strong quarter. It was partly driven by a big one-time order from India, but it was also driven by our expansion in the veterinary segment. You can also see that the consumables line is starting to taper off a little bit, and we had a slight decline in Q1 of 2024, but that is tied to the fact that we're changing our model in India, going from a distribution model to a licensing model. And we expect this decline to stabilize and go back on a growth trajectory. OEM has been really important for us, and it continues to be important for us. We are strategically differentiated within OEM. In the past 3 years, we've doubled our OEM business. And although we see a slight decline in Q1, it's tied to seasonality. For us, OEM is a future growth engine. And we focus a lot on bringing new projects to our pipeline. Up until now, the majority of our OEM business has been fueled by the same partners giving us more of their business as we've earned their trust. We're expanding this and going broader and doing much more active work to bring in more OEM partners for the future. We believe that there are significant growth opportunities here. So highlights for 2024, we delivered 5.4% organic growth, driven by the veterinary space. We also delivered really meaningful efficiency improvements in operations. We had good operating profit improvements and good cash flow. And if we double-click on our financials, I think what I want to point out here is really around our gross profit and EBIT improvements. We improved gross profit 3% in a quarter, and we improved EBIT by 27%. And that's really due to us getting utilization in our manufacturing, taking out cost in operations, and being a lot more efficient and effective. To give you an example, we've managed to reduce the time spent on producing an instrument by almost 50%. And the result you see here in the numbers. We have a strong leadership team with a few new additions, myself included, Holger, our new CFO. We also added a head of marketing this year. And we have a strong board of directors. This is a very seasoned group of people that take a very active role in shepherding the business forward. They have tremendous experience within IVD, and we just added one more member to the board, Rikke Rytter, who comes with a long track record of sales and marketing excellence, which is going to help us set the pace for our future growth. Our top priorities are clear for the year. We need to expand our hematology portfolio. We need to bring the new BM950 to market, and we need to continue to see that growth in the veterinary space. The second priority for us is to grow our OEM business. We have a capability which is unique. Only very few companies out there are able to do what we do. Producing reagents is difficult. Producing blood controls is very difficult. And if you combine that with being able to produce small, medium, and large batches for OEM players, this is a unique skill set that only very few companies can do. And we need to take more advantage of that going forward, and we will. And then finally, we're bringing lean into Bull. We need to improve our profitability. We are implementing a set of efficiency initiatives that will help us drive profitability going forward. We are determined to meet our aspirations of satisfied customers and being a good place to work and exceeding 500 million tests per year. And we believe that the operating margin target of 15% is well within reach. So with that concludes my formal presentation, Steen. I'm open for questions.
Thank you very much. I have to ask you about this 5-part system and the announcement that it will be delayed.
Yes.
What type of tests are they requiring you to do? And obviously you were not part of in this earlier, but was this not part of? I assume you have an ongoing dialogue with FDA throughout the development phase.
Correct.
And was this a surprise for the company that they required additional tests, or?
It was somewhat a surprise for us. The intended use of the instrument has not changed. So we expected that we would be met with the same terms as for the other instruments in our portfolio.
Yeah.
The FDA took a different path. They requested us to do a larger sample volume, not different tests, just a larger sample volume. The impact for us is, of course, there's a financial impact, but more importantly, the impact for us has been time. It takes longer to do more tests. So that's the reason why we've had to announce a further delay in the project.
But now you feel confident that you will submit and meet the new updated timeline?
Yes, I feel confident about that. I think we have a good plan forward. We are very far in the R&D work. Soon we will go into evaluation. Once that is done, that is when we have frozen the R&D specs of the product, and we'll be ready to submit for the regulatory bodies, CE and FDA. So yes, I feel confident with the timeline that we've reported out. Mm-hmm. It's unfortunate that we had to prolong it a little bit further, but I think the explanation is logical.
Yep. Excellent. Actually, we're running out of time. We had a little bit of a delayed start, so unfortunately we can't continue more with the Q&A. But thank you very much for coming, and I wish you all the best of luck on this new position and with the company. To both of you.
Thank you. Thank you.
Hi and welcome everyone to today's Investor Days at ABG. My name is Stefan Knutsson and I cover the next company, which is Prevas. And with me today I have the CEO, Magnus Welén. Welcome to us.
Thank you. Okay. So my name is Magnus Welén and I'm the CEO of Prevas. And today I will give you a brief update of Prevas and what Prevas is all about. And also a little bit looking into the future, which of course could be interesting. I start with a little bit of brief facts about Prevas. I understand that not all of you know everything about Prevas, and that's why you're here. We are an engineering consultancy company. We were founded in 1985 in Västerås, so we've been around for many, many years. We are listed on NASDAQ on the small cap since 1998. We are above, actually, it says approximately 900 coworkers, but now we are above 900 coworkers in Scandinavia, in Sweden, in Norway, and Denmark. And we work with demanding industrial customers. So we are very focused on the industrial customer and industrial segments. Last year, we made an all-time high again, so to say, for the fourth consecutive year. Prevas made all-time high, both in terms of invoicing and in terms of EBITDA. So last year we made almost 1.5 billion SEK, and we also made 169.4 million SEK in EBITDA. And in our business, in the consultancy industry, a margin of 11.4% is actually quite good, to be honest. Last year was, the first 2 quarters were very strong. Last 2 quarters were a little bit more tough in the market. So we believe that we made a decent year last year. But I will start with some trend analysis, some trends to keep an eye on, so you get a little grasp in our presentation here. These are some of the trends that actually affecting us at Prevas and you all that are listening to this presentation. Technological trends mainly, but also other trends, a lot of trends. Many things is happening, isn't it? And you can look upon this as something that to be a little bit scared and terrified about, or you can look upon it as true possibilities. And in Prevas, our tagline is "Hello, possibility." And of course, we see all of these trends, all of these changes that happens from a technological point of view as huge possibilities for Prevas. And if I've showed you this picture in 1985, it would have been extremely different. And if we move ahead 10 years or 2-3 years, it's different as well. So we need to be agile and adaptive. And that's why I like our tagline, "Hello, possibility," because we see possibilities in the constant change. Our mission is "Ingenuity will save the world." We believe that by using engineering and using our brilliant minds in Prevas, we actually, through technology, can improve the world. So that is very important for us working at Prevas. Our mission is that we co-create technological advancement for the betterment of all. But here comes something that is important for you as well. We do it for the people, and we do it for the planet, but we also focus on profit. And that's very, very important, because that is a foundation for everything else we want to do. So we are very, very business-driven in Prevas as well. So what do we then do within Prevas? I can talk for many, many hours, but I have 20 minutes, so I will be a little bit short. We say that the products that we are supporting our customers to deliver are physical, they are advanced, and they are connected. And in the middle there, in the green circle, you see a box. Bool, that were the last company presenting, they had blood analysis equipment. This is actually a product that we have been developing for a company called Gradient Tech, that also is a blood analysis equipment for medtech purposes. And that shows the capabilities that we have in Prevas. It was about over 20 engineers working in the project, working from mechanical design, with the sensors, with the hardware, with the software, also supporting the customer with actually the regulations and so on in order to meet the demands from authorities as well. And that shows a little bit about what we in Prevas actually can do. And what does this analysis equipment do? It actually measures in the blood related to sepsis, a very severe disease. In the past, it took 1 or 2 days to get a result from a lab. With this equipment, you can get the result in hours. Talk about actually doing something good for people and also, of course, for the profit. This product now is out in the market and is growing. It's fantastic. It's a startup company from Uppsala that is running this. Looking into the other part of Prevas, we were talking about product development. We're talking about sustainable production development. In terms of production, it's about increasing efficiency in production in industrial companies. We say that we work with sustainable solutions, automated solutions, and digitalized solutions. And the picture you see here is actually a steel mill. And we have a software called Furnace Optimization Control Software. It's a software that you control the heating of steel in steel mills. And by doing that, you reduce the need for gas for heating. And that drives down the need for carbon oxide. So you actually get a very good effect. You get high quality, you reduce the need for gas, and you reduce the carbon oxide footprint. And this software algorithm developed by Prevas is actually used in around 85% of all steel manufacturing in Scandinavia runs through our algorithm. So it's quite fantastic what we actually can do in Prevas in that sense. Then everything we do is connected to digitalization as well. You see the forklift there, that is from a customer called GKN that has been working with the software that Prevas has developed since many, many years. It's making the internal logistics more efficient in plants, in this case for GKN. Then a humble picture of our market. We are a Scandinavian company, and then I show you the world. Why do I do that? The reason is that our customers are world leaders in their different fields, and we need to be on that level in order to be able to supply and to help them in their journey, so to say. And that's why I love to show this, internally and externally, because we in Prevas, we are on that level and we need to be on that level. That's where we're aiming for, always to be. As I said, most of what we do, we deliver in Scandinavia, but there are also specific areas where we're delivering outside of Scandinavia as well. This software for furnace optimization control was delivered to Spain last year. We delivered to the UK. We deliver automation cells to the US. We deliver advanced calculations to India. So we have also an export business from Prevas outside of Scandinavia. But to be honest, it's not huge. That's for sure. What I want to show you as well is the industry breakdown. You can see that we work in many different industries. What is common for all of these customers is that they have extremely high demands. But we have a good spread between different industries, which of course is good from a growth perspective and a risk perspective. And that is very strong in the Prevas customer base. We are also strong in areas that are growing. Energy, for example, the green transition is areas which is growing. Cybersecurity is growing, where we have a strong position. And also other areas that are growing. Prevas is well positioned in that sense. Another good thing about Prevas is our customer list. We have over 2,000 active customers in Prevas today. The 5 largest, I hope you can recognize them, by the way. It's quite strong brands, world-leading companies. And these are the 5 largest customers that Prevas is working with. Saab, ABB, Atlas Copco, Sandvik, and Ericsson. But together, they are less than 25% of our turnover. So Prevas is not dependent on one customer or 2 customers. We have a very broad base of customers. Fantastic customers, by the way. A little bit about the Prevas strategy. You might have seen this before. You can choose to be the cheapest. You can choose to be the best. You can choose to be very, very close to the customer. And Prevas, we are a decentralized organization. And our strategy is to be in this corner. We come to our best when we aim to be best and we work close to the customer. We are not a company that's aiming to be cheapest. We are a premium company. When you choose Prevas, you don't choose us because we are the cheapest. You chose us because we deliver the best solutions. So we have, compared to many peers, a higher price point, but also a higher value delivered to our customers. Some other key aspects about the Prevas strategy. Everything is about adding customer value, and we work a lot with that. We also have one piece of our business is time and material consultancy out in the customer place, but we are also working with other business models. One example is that we got an order from a steel manufacturer recently. They have a control system for their home manufacturing. Now Prevas is responsible for that software, that application, for developing it, for maintaining it, and also for having 24/7 support. That is a long-term commitment, and you only give that kind of commitment to a partner that you trust. And Prevas is a company to trust. That is one example. The good thing, of course, is from a business cycle point of view, it's very, very stable business for us as well. And also with higher profit compared to some other businesses. We're building competitive strengths. We're investing in technology in Prevas. For example, we have EMC lab here in Stockholm, for example. And we invest in also other kind of 3D printers and technology in order to support our business as such. We are a decentralized organization. That means that our different units, they are having the right to take decisions. We need to be close to the customers. Before 2017, Prevas was a centralized company. Today, we're a decentralized company, and that was a key success factor for the turn, so to say, that Prevas has been going through for the last years. And then we work together between the different units. One example there is that we, for the defense industry, run rather large, complex projects with like 15,000 engineering hours. In order to do that, we work together between the different units. So we are decentralized, but we are also working together for the customer. But last but not least, action is very, very important for Prevas. So a little about the first quarter and looking forward. The first quarter was actually strong for Prevas. Given the market, given that the calendar effect was negative, we managed to grow with 3.2%. We managed to deliver an EBITDA margin of 13.2%, which in our business is a strong quarter, a truly strong quarter given the circumstances. So we're quite proud of that, actually. We also managed to increase the prices. We always work with the pricing, but even in this quarter, we saw that we were able to push pricing, which of course is very important over time in order to maintain the margins. Our focus for Q1 and also the coming quarters will be profitability. That is the most important part for us. We are not aiming for extreme growth. We're focusing on profit right now. We also had a good cash flow for the quarter. And we also announced an acquisition of Enmac, where we're transferring Prevas into a Nordic company instead of a Scandinavian company. Zooming out a little bit, you can see the development since 2017, where Prevas had a negative profit. And then we have made strategic changes. I'll show you briefly the strategy. We turned into a decentralized company. We cut off some of the overhead costs. And we also made some acquisitions over the way. But as you can see, we have transferred Prevas into a premium company in terms of profitability, also in growth. So now Prevas is a profitable company since many years, 4 years in a row with all-time high. And also we're aiming to continue to grow with profit. And that is also turning into a higher EPS over time, as you can see. Then we also made another progress during this quarter where we communicated the acquisition of Enmac. Enmac is a Finnish company. They are a little bit less than 200 employees today. They have a turnover of 23.3 million euros. So it's a rather big company in that sense. They have 8 offices in Finland, a strong position in the northern part of Finland as well. And that means that we now have a fantastic platform for future growth in Prevas, in Finland for Prevas, which of course is very good. And together then we shape a Nordic group, a pan-Nordic group, 1,100 employees, 1.75 billion SEK in annual turnover. So Prevas is taking the next step in this sense with this acquisition in Finland. Enmac is quite similar to Prevas in many ways. They are a premium company. They love to work with the more advanced assignments, the same as Prevas. So when I came to the Enmac teams, it felt like coming home. It was more or less the same culture, very driven engineering, very, very market-oriented and business-oriented team. So it felt like coming home, coming into the team in Finland now. So that, I believe, will be a strong platform for us moving forward. We have signed, but the closing is dependent on FDA approvals, so it will take a while before we actually get access to the company as such. But that is very interesting. They are also strong in system deliveries, delivering projects to customer, and thus adding even more customer value from Enmac team. This company as well has been around. It's been around since 1985 and building, as Prevas, long-term relationship with leading industrial companies. Brands like Valmet, Andritz, Kemira, Metze Group, and also Fortum. It's companies that most of you already know of course. They're also present in other Scandinavian markets. There's also global presence. So it also adds up new customers for Prevas actually through this acquisition. So we look forward to explore the market synergies together with Enmac moving further into the future, so to say. With this, the most important question isn't this one. Why should I invest in Prevas? I tried to put some figures, some points according to that. I'm biased, by the way. This is my role. But Prevas today are truly a premium company. Comparing to the peers in our business, we are actually a premium company. Talking to our employees, they love working at Prevas. We have high scores for the EMPS, and we have a rather low turnover of personnel. Talking to our customers, they want to grow together with Prevas. We have strategic cooperations with them. So today, Prevas actually are a premium company. We have been working with that for many, many years. And then we are well positioned in the global trends. So as I said before, digitalization, industrial IT, climate transition. We're strong in medtech, as I showed. That is also over time growing business. And we're also strong in the defense industry that right today is growing dramatically. Then we have a proven track record of growth, both through acquisition and through organic growth. But we do that with profit. That is very important. We're not offsetting the profit in order to grow. So our target is to have 12% EBITDA and to grow 10% annually. So we want to grow with quality. That is important strategically for us. We still have a strong balance sheet. It was extremely strong before Enmac, but still very, very strong. And quite low debt even after the acquisitions of Enmac. So we are actually looking for acquisitions, further acquisitions as well in Prevas. Then I put it like we have owners of flesh and blood. You need to decide is that good or bad. But for us, I think it's important that we have a strong private owner part in Prevas as well that is very, very committed, and they want to build a fantastic company over time. So they are represented in the board as well. And then also, I am a shareholder of Prevas. I have invested personally in Prevas. We have a stock option program that has been running for 3 years that will be converted this summer, which means that we will get even further. Many people in Prevas will now actually be shareholders in the future as well. And that is very good, I believe, because then everybody get the same agenda moving forward. And that was my presentation. So questions are very welcome.
Thank you very much, Magnus. I will start off with some questions about the market.
Yes.
I mean, we have seen some indications of a better market ahead. I think you mentioned it in your Q1 report, and your peers has also made similar comments of late.
Yeah.
Would you say that it's clear that the market is improving now, or how do you view the current situation?
I view it as there are some positive signals, that's for sure. But we also see that there are decisions that are taking longer time. So it's I would say it's rather similar actually Q2 compared to Q1. But there are more positive discussions. But we have not yet seen that in a booming demand. That's not the case. But it's not going down either. It's more or less the same, but with more positive signals today.
That is a good comment. Then, just to continue on the Enmac deal, which I think looks really interesting on paper. I mean, you enter the Finnish market. You mentioned that they have a strong position in the northern part of Finland. Do you think that can help you to penetrate the northern part of Sweden in a better way going forward as well?
Absolutely. Last week I went to Oulu in the northern part and Rahe, our offices in Enmak in the northern parts of Finland, together with our manager for the Luleå office. And they immediately find the very good connections in order to be able to also improve our sales in the big investment projects in the Nordic part of Sweden. There are massive investments going on, and we see possibilities to actually utilize the resources coming in from Finland in those as well.
And as we are not as familiar with the Finnish market, what do you see in terms of growth potential for the Finnish market going forward after the acquisition?
I believe we have both through organic growth and also through acquisitions. I see potential to grow in Finland. Right now, the Finnish market is more or less like the Swedish market. It's not super booming. I would say it's quite flat. But over time, I'm very convinced that we will be able to grow. We are a very small player in the Finnish market. So there are a lot of market shares to take. But also the possibility to utilize some of the expertise that we have in the other countries in Prevas to open up these customers for those kinds of services is an opportunity we see, and growing in that way as well, to add more services to the existing customer base in Finland. That's also a way to grow.
Would you say that the competition is slightly less on the Finnish market compared to the Swedish market, or how do you view that?
I think it's rather similar. It's more or less the same players, so to say, in the Finnish market. It's not exactly the same, but it's rather different in different areas and different competence areas as well, I would say. But generally, it's more or less the same, I would say.
And we saw that the client list of Enmac is sort of similar to Prevas, I would say, only that it's Finnish customers. But how do you sort of think that this deal will improve your capabilities, that you are strong in certain areas and maybe Enmac in others?
One example is actually in something called piping design. Not everybody knows what that is, but it's a quite complex. If you build a new plant for a process industry plant, then you have a lot of piping, all the pipes, and that is actually a niche area where Enmac has a super team. We don't have that in Prevas today, and that adds a new business, so to say, for us that we can compete with also in Sweden and also in other markets, mainly in Sweden, I would say. So there we see good opportunities to grow based on the new competences coming in through the acquisition as well.
Perfect. Then I would like to go over to talk a little bit more about AI. And I think that we're all testing different AI tools currently. How has it affected your industry so far, and how do you think it will change the business climate long term?
Short term, I would say that the industry is testing a lot. It's not like you, to a broad extent at least, is using AI for programming, for example, in final products yet, because it's a matter of you need to have the so to say everything from the legal point in place in order to actually utilize the code that you generate in that sense. But what our customers are working with a lot is to improve the general process, to find the data more efficiently through generative AI, for example. In that area, it's happening a lot. But also in the industrial application, we see that you are implementing AI as well. We have a project today where we're using AI. We're developing a system for forklifts. When you run a forklift, you don't want to get too close in order to destroy the boxes, so to say. And we are now, for a customer, developing a system with sensors and also including AI functionality to actually avoid to destroy the different boxes that you work with. And there we develop the hardware, the software, and also adding, as I said, AI functionality into that product. So we are working with it as we speak in our projects as well, in that sense. And moving on in the future, I believe, I don't see that there will be a lesser use or lesser demand of engineering hours. What I see is that we will get more done. We will increase the pace. Yeah. Because the needs ultimately are very, very large.
Yeah, that was my follow-up question, because obviously I think the main part of the business models within the consultancy space is time and material.
Yes.
You mentioned that you have some other business models as well, but it's easy to see that you can do more with less time, but how do you think it will lead to more projects being offered on the market?
Oh, yes.
Yeah.
It will increase the pace because everybody wants to get out more products to the market. And if we can increase the pace for engineering, lower the cost per innovation, so to say, then we'll get more products and increase the pace. And that will need hours. I'm very convinced.
And what do you think about profitability then? And do you think it will increase, or do you think that customers will want more done on lower fees?
I don't think that it will affect the profitability for Prevas in that sense. I don't think so, because over time it will be a balance as well. And of course, in short term it will be someone is a little bit ahead, someone is a little bit behind, but over time it will be stabilizing, and output will be the end users gain, so to say, of what the products and services that our customers are delivering that will, so to say, manage their profitability and also our profitability. Because our success is built on the success of our customers.
But would you say that you are more or less willing to try out new business models because of AI capabilities?
I wouldn't say that we change our business models today based on AI. That we don't do.
Oh, okay. I think that was it. I would like to thank you, Magnus, for coming and presenting with us here today.
Great. Thank you very much. Thank you.
Hello and welcome. My name is Victor Rudistelnov, and I'm a real estate analyst here at ABG Sundal Collier. With us today is Kęstutis from East 9, and I won't stand in your way. I'll just hand over the image and word to you for presentation.
Okay, thank you very much, and thank you for this opportunity to present East 9 and what are we doing. So for you who do not know, do not follow us on a daily basis, we actually in the process of building a real estate company and doing it in the most exciting part of Europe, actually the fastest growing part of Europe, on the other side of the Baltic Sea and Poland. We are a long-term owner, so we buy and hold our properties. Very strict focus on high quality, very well located properties. And we focus entirely on office today. Currently we are present in Vilnius, Riga and Poznan. We're striving to become a company appreciated by its customers, enjoyed by its employees and valued by its investors. We are headquartered in Stockholm, listed on Nasdaq mid-cap list. When I meet people from traveling in Eastern Europe, actually, they all tell me that there's beautiful old towns and there is a lot of gray areas, great, boring Soviet buildings. But actually, what most people miss is this very, very rapidly growing economy and the new part of the world. And actually, this part is growing very, very fast. Some of those buildings you wouldn't see on Google Maps still, because they've been raised and popped up recently. This is a picture of Warsaw skyline. But this is very similar in Vilnius and in many other places where we are actually acting. So why we think it's such an exciting place? You can actually see on this graph, since 1998 to 2023, actually Poland, Lithuania, Latvia, the markets we're in, are among the fastest growing in Europe. And actually the expectation that they will continue growing in GDP faster than others. Of course, Ireland and Malta are a bit faster, but they're very, very tiny markets in general. So Poland being one of those really big, exciting countries as well for our future. Another very important aspect that people miss is actually we are in a very different structural environment. There is a pending demand for office work, and it's actually growing. This is a picture from Vilnius showing that the number of office jobs between 2000 and 2022 actually has grown significantly, but stands still for 19% of the overall employment in the cities. But if you look on the more developed parts of Europe, slower growing, it's around 26, 29, 30%. So we are still in the market that is not saturated and has the structural growth potential going forward. There's also a combination of higher yields and lower rental levels that makes it so exciting. And these curves, they diverge if you compare to the more developed market, but at some point of time they will converge. So either the rents will increase and the yields will probably start falling in the future once the markets become more saturated. But it will probably go to sort of in both ways. And this is a very exciting combination to be early on in this market and actually start investing in it. We still are 1/5 of Stockholm rents. Of course, Stockholm is an outlier, but at least half of the sort of more developed markets where we look anyways, and actually in almost twice as high yield levels in general. This in combination with the same financing conditions. So the margins that we sort of can make are significantly higher in this part of the world. And this is just a graph showing how our journey to date. We have been growing our real estate portfolio very fast, as well as revenue streams. And now we are in 3 cities. So what we do and what we focus actually is that we focus on very modern buildings of high quality, relatively flexible office space. In general, we have approximately 10 square meters per employee. So this is, again, compared to Stockholm, which is higher. This is already relatively efficient use of office in our premises. There's still potential for downsizing for some companies, but actually we've been benefiting from this trend overall. Intelligent and sustainable buildings, inspiring ground floors, and service beyond expectations. Also, we look at the services where we can actually be also accessible from all the communication point of view, but also in the vibrant places. And we also spend a lot of time to understand our tenants and their needs and actually how we can work and having a bit of a hospitality attitude, which is also a bit unique because most of our competition is owned by the funds. In Poland, almost 95% of all properties are commercially owned by different fund investors, and they never have even any relationship with the tenants, which is an opportunity for us, as I see it. So if you look on our operations, overall property value, almost 600 million euros. We still own only 14 properties, but they are relatively big in size on average. 182,000 square meters of office space. Occupancy is almost 93%, and average age of our portfolio is 10 years. Many properties are actually younger than that. We have a couple, one or two that are 20 years old that bring down the average a little bit. We are in 3 cities, Riga, Vilnius, and Poznan, but they all are along this railway line, the infrastructure line that will connect the Baltic states, Poland, with Western Europe with a fast-moving train, which also will integrate even further the whole region. And we believe that this integration, again, will be very creative in terms of jobs, trade, and GDP growth. We also are located in very central parts of each city. So in Vilnius, we actually have 3 clusters, and starting with another cluster just in Naujamies is a new part, which is more tech companies would like to stay and be. In Riga, we are very centrally located along Main Street, and in Poznan we have only 1 big property, but it's very big. It's almost 40,000 square meters, and it's in the very, very heart between the railway station and the city center and the old town. So this is just a glimpse of our properties. I will not go into detail. Just know that you see the environmental certifications. They are very, very high in the top brackets of every possible evaluation scale, which is kind of LEED and BREEAM that are the main 2 international that are used. So overall, portfolio has been growing very nicely, but also the rents have been growing in our portfolio. And this is a little bit showing actually the potential. Once you have a very high quality portfolio, we're actually managing to increase the rents even though we see higher vacancies in the market overall. But we see companies downsizing, but companies are ready to pay additional euro per square meter, but to get a better location and better premises. Our vault, it will be fluctuating around 4 years. Occupancy 92.7, and surplus ratio, which is very high for office at 92%. And we believe that will stay because of the structure of the rental agreements in the market. So this should be above 90%. We aim at least keeping it above 90%. The key tenants, we still have high concentration to certain of our tenants. This is partially one of the risks that we have. But at the same time, they are all exposed to a very rapidly growing part of the economy. And this is a result of a build-up phase in our portfolio. So once we add 2 or 3 more bigger properties, actually this will change significantly. And of course, we try to reduce a single tenant exposure risk, but at the same time, these are very, very strong names. Allegro is the leading Polish e-com player. It's actually 6th largest globally, and a very profitable operation. Danske Bank, you all know. Telia, you all know. Vinted is a Lithuanian unicorn. I think they are present in Sweden as well, selling secondary clothes, second-hand clothes. Swedbank, Rockwool, Citco, you probably know all of the other names. So in terms of sustainability, 100% of our portfolio is now sustainability certified, again, in the highest brackets of each system. Green financing stands for 69% of our overall financing. We only have bank debt in our financing. Green leases, 68%. We have an ambition to be leader in sustainability in our market. We target our operations to be climate neutral by 2030. This is the property operations. In Lithuania, we're almost there. We're not there in Poland. We target 5 stars in GRESB. We lost 1 star last year, but this is just due to historic comparative reasons. We are happy because people came back more to the office and consumed more water and so on, but this affected us negatively in terms of environmental impact, unfortunately. Yes? It's similar to Swedish gröna lån leaseavtal. So it means basically we add on a commitment with the tenants that we do environmentally. We try to save energy. We attempt to sort the garbage and so on and so on. So this is a type of addition, add-on to the lease agreements. So in terms of financials, relatively still quarter on the top line, growing only 1%. But on the bottom line, we're actually doing extremely well, up 17% in profit from property management. If we compare to Q1 last year, if we compare to basically even Q4, we're also growing even faster. So overall, strong underlying performance. If we look at our financial position as such, we have very strong, very big cash position, 128 million euros, and the overall balance sheet of 700 million euros. In terms of earnings capacity, there is a slight decrease compared to the year end. This is mainly affected by some of the one-off effects that will, of course, stay in our books for the next coming 12 months. But if you look, if you compare to basically rolling figures, so we still have growth potential, and we will continue to grow over this year, even without adding additional properties in terms of our profitability. We have very strong financial position. So if you look on cash, 128 million euros, ICR 2.7, increasing even with increased interest rate level overall in our portfolio. And our portfolio, I mean, we have shorter maturities overall in the market because we are only bank finance. So on average, our maturity is around 2.5 years when you roll it. So this is something that affected us, of course, negatively in this higher interest rate environment, but still we are in a very sound position. LTV at 27%, net debt to EBITDA at 5.2, which is probably the lowest in the market today, and maturities are starting to increase as we gradually refinance our loans. Yes. There are certain, we had the refinancing in Q1.
What do you expect the rate to be for the coming quarters?
I think it's topping here somewhere, yeah. So overall, just briefly to recap our case, we are a growing company with a unique portfolio of very nice modern office buildings, growing in the very fast growing market, the fastest growing market, the fastest growing part of Europe. We have sustainability certified portfolios. It's very sustainable. It's also sustainable from the customer perspective. We believe we have very strong tenant relationships with very strong names. And of course, it's an exciting journey to be in. So I think I've done almost in time.
Yeah, it's just on time.
Yeah.
Thank you very much. Get back on the cross. So you mentioned you whisked by it here, the balance sheet. But this is the key issue to understanding East9 now, isn't it? You didn't mention this in the report, but in Q3 of last year, you sold Melon Fashion Group, which was a Russian fashion retailer, and received the cash from that. Do you just want to mention that quickly before we go into the other questions about that divestment?
Well, I mean, this investment was a part of our historic portfolio before East9 history, so to speak, started in 2000, or restarted back in 2015. We were an investment company holding a wide portfolio of different assets, and this was one of the historic assets that developed extremely well. It was a Russian fashion retailer, something similar to H&M or Inditex. But locally Russian, where we held around 36% of the shares in the company. And of course, this company was growing extremely well. It was totally debt-free, developing very well. And then we planned an IPO. It just didn't happen because of the war broke out, and then it took me 2 years to complete the exit, which finally was very successful. We managed to exit that holding and receive the proceeds, even though it was kind of complicated process to do it in the midst of the war, and of course with all the sanctions and all the limitations that are imposed on both foreign investors and money transfers and everything. But the money is in Sweden and safe.
Yes, and then
with Swedish safe banks. So.
Yeah. But that was very impressive that you managed to actually get the funds. And so you've used some of that funds to buy back bonds.
We bought back the bond because this was our most expensive financing source,
right?
And that was maturing very early. So we thought that this was a good way to actually to utilize part of that cash.
Right. Maybe we could go back to the balance sheet slide just for the audience as well, because that means that you now have a cash position of some 128 million euros. That should be put in perspective to your property assets, around 600. You're a property owning company. You've identified Poland as an attractive market. How much of that capital are you looking to employ in Poland in the near term, and to what sort of yields?
In general, I think we will employ that cash, and we're working on a number of acquisitions right now. We'll probably employ a majority of that cash, and I think our kind of acquisition capacity, let's say, is around 200 million euros today, given a 50% leverage level. The yields have increased. I think in general what we are looking is, if you look for the regional Poland, probably is right above 7%. And if you look in Warsaw, is just above 6%, but that is for very modern, newly built assets. I think what is more important to look is probably the capital values, because we are buying right at the level or very close to the construction cost today. So from the risk perspective, there's not such a big discrepancy, to be honest, which protects a bit of a downside risk, because construction costs have been growing over the years, of course, driven by inflation, driven by a number of factors, including the war. But what we see today is that the prices for land have not been affected negatively. On the contrary, the residential market is actually booming in our part of the world. It's partially pushed, of course, by a very high refugee movement from the war in Ukraine. But also in general, we see very, very strong underlying growth in the economies and relatively poor living standard compared to at least what we have here. So there is an upgrade need overall, and the residential prices have been booming. And residential actually prices now have become significantly higher, so it's more profitable to build residential than commercial. And that we believe that it will be sort of, this will compete for the land banks. At least we see a lot of commercial projects now being transformed into resi. Resi for rent or resi to buy. And this would also probably will keep the levels, construction levels or pricing higher.
So why have you chosen, because you selected, there are a number of Polish cities that you could invest in, but you seem to have narrowed in on Warsaw and Poznan.
Yes.
Why is that?
Because of the specifics of each particular market. Of course, Warsaw is a capital city. We haven't done anything yet in Warsaw, but we're looking into Warsaw. And Warsaw take a longer time for us to understand and to evaluate and actually understand dynamics. So that's why we're a bit more cautious about Warsaw, even though it's probably easier to do deals there. At the same time, we understood Poznan very well, and we spent a lot of time actually analyzing overall market, seeing sort of where how the market evolved, and we decided not to go for Krakow and Wrocław and those kind of very popular secondary cities, but we chose Poznan because we understood. We found a very nice micro location. It was easy to understand the city for us, and at the same time, there was a prime opportunity to be in. It's also there is an opportunity to build a very strong position in the market. So when we enter a market, we want to reach 10% market share relatively quickly, so that we become an important player. And today in Poznan, we are already at 5-7% of the market, of the overall market, and probably if you look on the prime segment, we definitely bigger share there. Same in Vilnius, we are 10% market share, but around 20-30% in the premium segment, depending on how you classify various properties. So when you are in this segment, you want to be in a significant position, so you are actually in the play all the time.
And just a final question then, before we're out of time. Who are the big, because you focus on newly produced or new properties, right? Who are the big developers in Poznan and Warsaw that you'd be looking to perhaps buy from?
I mean, there are three big players in Poland. It's, of course, the Swedish Skanska is a big player, and we did one transaction with Skanska. There is another called Jalamco, and there is Echo Invest, which also has, which is a American-owned, but has a former Skanska CEO, so a Swedish-speaking CEO. So a lot of Swedes there already. So
that's interesting.
Yeah.
Okay, I think we're just about out of time. I'll thank you, Kęstutis, for the presentation. Thank you.
Thank you.
Hej och välkomna tillbaka till ABG Sundal Colliers Investor Days. Jag heter Benjamin Wahlstedt. Jag är aktieanalytiker på Stockholmskontoret med ett speciellt fokus på konsumentaktier. Med mig här idag har jag Per-Arne Andersson, vd på Svedbergs Group, för att berätta lite om sitt företag. Per-Arne, varsågod.
Tack så mycket. Ja, Svedbergskoncernen eller Svedbergs Group. Vad är det vi gör för någonting då? Vi har en bolagsstruktur där vi förvärvar bolag som vi ska bygga starka tillbaka på ett hållbart sätt. Utveckla det på ett bra sätt. Vi har våra värderingar i att vi ska se till att vi bejakar olikheterna. Vi vill ha olika typer av kompetenser, människor in i våran grupp. Och vi också värderar väldigt stor grad av frihet och naturliga samarbeten. Vi styr inte, jag kommer tillbaka till det längre fram, vi styr inte utifrån en one company-struktur utan utifrån en affärsmodell väldigt decentraliserad. Och naturligtvis se till att vi kan ge våra aktieägare en god avkastning i form av både värdeskapande och utdelning. Innan jag tittar framåt ska vi ta en titt tillbaka då. Svedberg ska nämna är mer än 100 år gammalt. Men om vi går fram och spolar fram till 2016 så hade vi ett varumärke och vi har en omsättning runt 450 miljoner svenska och en rätt stabil lönsamhet har man haft över lång tid. Men växte inte så mycket. Många när man pratar så här, hur stora är Svedberg, så trodde man att man var mycket större än vad vi de facto var där. Vad är vi då idag sedan 2016? Vi har 8 varumärken. Vi har en försäljning då när vi slutade 2023 på lite drygt 2 miljarder. Och vi har en hög lönsamhet på 13% och en stark tillväxt. Så tittar man på den här utvecklingen då, så kan man säga då 5 stycken segment, 8 varumärken och har ni en liten annan siffra, men det är vår proforma då. I och med att vi förvärvade vårt senaste förvärv kom in i slutet på november förra året. Så då ligger vi någonstans på våra finansiella mål på en EBITDA-marginal på 15%. Så skulle vi haft då Tebalux hela 2023 så hade vi landat på 2,2 miljarder och 330. Och här har vi då haft en genomsnittlig tillväxt då från 2015 på 22% då i den delen. Och vi har ett mål på att vi ska ha 10% tillväxt varje år. Och då kan man säga att det blir i princip att vi ska dubbla vår omsättning vart 7:e år. Då. Vad har vi för varumärken? Varumärkesbolag i koncernen. Nu har jag satt dem här, inte i storleksordning utan i vilken ordning de kom in i koncernen. Svedbergs först med 27%. Ni ser flaggorna längst ner vilka geografier vi verkar på. Macro Design står för 9%. Casse 5%. Roper Rhodes som är i UK. Och Irland 57% och Tebalux 2%. Och då är det siffrorna för lite slutet på november och december. Men de är betydligt större än så. Sen kan man se de här geografierna då och den marknaden vi jobbar i. Finns det, hur stor är den och hur ser den ut framöver? När man ser det här så, ni som läser nyheterna kan se att det finns varierade siffror på hur mycket man bygger och hur mycket behov det sker, eller hur mycket som byggs från år till år. Men om man tar över en tid så ser man så att det finns ett behov som är någonstans i storleken på de här. Och då kan man ta UK, Holland, Sverige, Danmark, Finland, Norge och Irland och totalt får man fram till en summa. Så vi har ganska små marknadsandelar så det mesta är ogjort. Och det här är då alltså antal hushåll och antal nykonstruktion, alltså nybyggnation av antal bostäder. Och ni kan se i Sverige, jag tror att förra året var man på någonstans strax runt 30 000 bostäder. Nu ser man väl att prognosen ska vara lite bättre för 25 än 24. Men det här vi har ju varit upp mot 55-60 000 i Sverige. Och så ser vi då RMI då står för Renovation, Maintenance and Improvements, alltså förbättringar då, ungefärlig storlek då i miljarder svenska kronor då. Så den här är, man hade önskat att det hade funnits en statistik likt bilbranschen eller något sånt, men den här är liksom rätt så väl underbyggd. Vi bygger vår koncern på 5 strategiska pelare. Jag kommer gå igenom dem var och en för sig lite längre mer detaljerat. Lönsam tillväxt, vår affärsmodell. Var duktig på försäljning, säljexcellens. Likaså på produktutveckling. Var duktig på att innovera och utveckla nya produkter. Och sen ledarskap och organisation. Men om vi tittar först på lönsam tillväxt då, så är det så att vi kan växa genom att gå in på nya geografier, eller vi kan addera till nya produktkategorier eller förbättra vår kompetens. Det här kan vi göra antingen organiskt eller genom förvärv. Det är väldigt viktigt för oss att växa organiskt. Ett exempel till exempel på nya produktkategorier är när vårt bolag England Roads lanserar badkar, som då i det fallet Svedbergs varumärket har i Sverige, så kan man ta med sig den in till den engelska marknaden. Så kan vi på det sättet få en synergi och ett värdeskapande. Vår affärsmodell är också bygger på att vi samarbetar utan sammanblandning, kallar vi det. Och det här är att allt är by default decentraliserat. Vi har ett litet huvudkontor, vi är 4 personer. Så vi lägger oss inte i, vi vill inte sysselsätta bolagen, vi vill ha kompetenta ledningar som driver och utvecklar sina bolag. Men vi har 3 områden som vi jobbar med i så kallade council, där det finns en med från varje bolag som vi rådger i de här. Och jag kan börja från botten, till exempel sustainability. Så det är väldigt viktigt att guida bolagen. Vad behöver de göra och vad behöver vi göra på koncernnivå, så vi liksom får resurserna på rätt sätt. Det är det mest effektiva sättet att göra. Då hjälper vi och guidar bolagen i den. Likaså när det kommer till digitaliseringen och cybersecurity. Det finns ingen idé att varje gör det själv, utan då samordnar vi den delen. Och på sourcing och produktion, vi tittar på så här, finns det något, och då kommer det här ifrån bolagen. Finns det något område där vi skulle kunna bli effektivare och köpa in bättre, med bättre kvalitet eller bättre pris eller bättre servicenivå från leverantörerna? Så att det är de områdena vi samarbetar på. Sen bejakar vi och uppmuntrar till att lära av varandra i koncernen. Då. Tittar vi försäljningskunskap och excellens, alltså vara väldigt duktig i sin försäljning, så är det att vi är ganska spridda i våra säljkanaler. Vi vill ha en stor täckning i geografierna. Och här ser vi då vilka typer av kundsegment vi vänder oss till. Och, så att tar man UK, vi finns på över 4 000 platser, kan man köpa våra produkterna från de här 3 varumärkena som är i England. Och likadant i Holland i den. E-commerce här är inte genom egen e-commerce utan genom plattformar då. I Sverige, typ läs, bygg hemma i de fallen. Då. Produktutvecklingen. Man kan ha en synpunkt att du kanske byter badrum vart 15:e, var 18:e år någon gång. Sånt där, och det säger så då behöver du inte ha så stor fart på produktutvecklingen. Jo, det här är jätteviktigt. Vi strävar efter att ha 30% av försäljningen som kommer från produkter som har utvecklats de senaste 3 åren. För att ha en hög innovationsgrad i det här. Och samtidigt se till att vi har produkter som har en bra kvalitet. Att möta sin kund, att det är rätt kvalitet. Och att det möter den nivån och kraven som kunderna vill ha. Och sen naturligtvis kontinuerligt utveckla vår range och se om vi kan bredda det med andra kategorier. Sen gör vi ju inte så mycket inga kärnkraftverk och inga flygplan, utan det är ganska enkla produkter. Och vad skiljer oss ifrån konkurrenterna och hur ska du vara vassare? Och det är att ha ett bra ledarskap och en bra organisation. Vi ska ha de bästa medarbetarna. De som tar det här extra samtalet på vägen hem och är väldigt motiverade. Och det här är väldigt viktigt för oss att ha ett bra ledarskap. Vi mäter enligt Great Place to Work i alla bolagen. Och vi har initiativ i varje bolag för att förbättra den här delen. Om vi då ser lite på våra varumärkesbolag så har vi Svedbergs, som jag nämnde tidigare här. Stor del av försäljningen är i Sverige. Jag har haft en liten tuffare situation nu kan man säga. Har en viss del av sin försäljning på projektsidan, och den har ju då varit lite svag på svenska marknaden, om man inte kan säga nästan obefintlig då, när man ser hur marknaden i Sverige har varit. Har produktsortiment som sträcker sig över alla kategorierna i princip i den här delen. Här ser ni några av dem. En duschen längst till vänster som då fick Red Dot Award. Och det är viktigt med designprisen också för att kunna kommunicera. Epos, badrumsmöbler, och det är både spegeln från Svedbergs och i den andra bilden så handdukstork. Allting är Svedbergs brandat i detta då. Och vi har också en liten trevlig film för att få lite känsla av varumärkena i den här. Vi lever ju av att sälja våra produkter. Kommer ju från mycket hållbart skogsbruk naturligtvis. Småländska skogar. Så kan det se så här ut när man har bearbetat materialet. Och kan man säga att här är ju alla produkterna då är ju även blandare och porslins, alltså WC, de här är då från Svedberg, så det är utvecklat under eget varumärke. Första bolaget som förvärvades 2016 då var Macro Design, kommer då utifrån en duschkabinsproducent kan man säga i den, och också breddat sitt sortiment. Finns i Halland, i Laholm. Sverige är också största marknad där efter Norge. Och har ju också haft en då märkt av den svenska konjunkturen. Där kan vi säga att det har vi väl bottnat och ser liksom att man taktar på en, ja, ser väl ut som att det i alla fall hissen har stannat och det är på väg åt rätt håll. Produkter här då, både badrumsmöbler, dusch, lite belysning som då är sånt som man kan nedpendla in i badrummen. Också lite känsla för hur det ser ut. Här är ett varumärke som är lite högre positionerat i den. Lite mer unikitet kan man väl säga, de olika produkterna. Säljer då uteslutande på, om man säger då, till fackhandel, bygghandel, den delen, inte inne någonting i projektsidan då, i den delen. Sen har vi Kasse, förvärvade vi 2020 i december. Vi har någon förkärlek för att förvärva bolag i december till ekonomernas glädje. Då ska jag bokslut också. Det här är då största kategorin blandare i det här, och danska marknaden, den största marknaden. Ett hög lönsamhet, har legat plus 20% i bita under hela vår tid och även innan också. Och här är ett, tycker jag, ett bra exempel. Vi har förvärvat ett bolag, familjeägt, vdn är fortfarande, alltså ägaren är fortfarande kvar som vd och fortsätter i bolaget. Och det är ju det så vi vill ha det och vill få med dem. Och har då, som ni ser, lite annan typ av produkter då med mycket blandare och också lite annan design. Danska marknaden skiljer sig på så sätt att du har ju köksbutikerna har även badrumsmöbler, och i och med att vi säljer då här blandare till köksbutiker också, så säljer vi inte så mycket badrumsmöbler i Danmark för att inte konkurrera med vår kund då. Så här är en blandare som vi... Den är ju mer då köksblandare som vi inte har så mycket inne i badrummet. Men det finns lite andra varianter också som kommer in i den delen. Rope Roads förvärvade vi i december 2021. Då var Rope Roads större än de andra 3 varumärkesbolagen tillsammans. Så det var ju en stort förvärv. 3 varumärken, R2, Tavistock och Rope Roads. 2 bröder som ägde det här. Bröderna var inte aktiva. Ledningen var lite delägare. Det är kvar ledningen i bolaget. Är UK och Irland är deras marknad. Och har i princip ett stort sortiment. Har precis lanserat badkar. Har inte dusch, väggar och den delarna på marknaden. 3 varumärkena, och de är då lite olika positionerade. Rope Roads lite mer mid-high, R2 lite lägre, och Tavistock vänder sig lite mer till en annan kundkategori, till grossistdelen. Och det här ligger ju lämpligen då i orten Bath i England, och en fantastiskt trevlig stad. Men det här är ett fantastiskt intressant bolag. Det är alltid så när man ser något bolag, så vi har inte tittat på något där man inte haft en, så att säga, nästan en hockeystick, att man ska nå olika nivåer. Och de här har ju verkligen levererat på det de har sagt att de skulle göra. Och de är väldigt duktiga på produktutvecklingen och på försäljningen. Har ingen egen produktion, utan har produktutveckling och egen produktutveckling och konstruktion då. Och sen underleverantörer då som supporterar den här då. Och här ser man också att det skiljer sig en del i design emot den skandinaviska. Och det kan man säga att därför ser vi att det är rätt så unika produkter på respektive marknad. Sen i slutet på november så förvärvade Tebalux i Holland. 2 varumärken, Tebalux och Primabad, och det faktiskt agerar som 2 separata bolag som agerar ut på marknaden. Badrumsmöbler, produktion i båda bolagen, eller båda varumärkena i Holland. Så de är nischade på den delen. Bra lönsamhet, runt 25%. Och så de gör också ett väldigt bra jobb. Ägaren är kvar. Och så det har varit ägarledda båda. Primabad köptes av Tebalux för 2005 och vdn i Primabad var ägare tidigare och fortfarande kvar i bolaget då. Så de här 2 typer av varumärkena med de badrumsmöbel kan man säga och speglar. Inga blandare, inga badkar, inga duschväggar i den delen, utan bara badrumsmöbler då. Det var våra varumärkesbolag. Jag nämnde våra finansiella mål och det som är sagt väldigt viktigt med organisk tillväxt är att hela tiden bli bättre idag än vad vi var imorgon. Och en EBITDA-marginal på överstigande 15%. Hållbarhetsmål. Vi jobbar väldigt strukturerat fokuserat på hållbarhetssidan. Vi gjorde tidigt GOG-protokollet i alla 3 skop. Vi visste nog inte riktigt vad vi gav oss in på när vi började, vilket arbete det var, men vi har lärt oss oerhört mycket och jobbar strukturerat ner i varje bolag med reduktionsplaner på de här delarna. Så att här är vi väl både bemannade och fokuserade och gör rätt saker på den delen. Det är ett tag sedan vi släppte vår Q1-rapport, som jag tycker var ändå en väldigt bra start på 2024, där vi levererade. Vi har en bra utveckling både i England och Holland, och nu är det inte så att de marknaderna är bättre eller sägs att de inte påverkas negativt utav byggkonjunktur, utan det är så att vi gör ett bättre jobb i de geografierna. I den delen, både säljtillväxt och grossmargin och EBITDA-nivåerna då. Sen har vi sett att både svenska och finska marknader har ju varit lite svagare i den delen. Och marknadsdesign och kasse har på något sätt kommit ner på nivå, men stannat på nivå, och ser vi att det ska väl förhoppningsvis bli bättre nu i de delarna. Så här ser lite skillnad på kvartal mot kvartal då, och det är klart att nu får vi in ett bolag till då, så är det klart vi går från 476 till 572 miljoner. Så det är klart det är en ökning med 20%, men det är negativ organisk växt då, i den delen. Så vi tittar framåt, så vad vi fokuserar på det är att få ihop de här bolagen en tajtare in i gruppen, och då pratar vi inte om one company utan mer liksom att jobba tajt ihop med oss, att vi utvecklas åt rätt håll. Fortsätta att utveckla nya produkter, kontinuerligt investera i den delen. Vi har inte slått av på den takten även om det är en lågkonjunktur eller lägre efterfrågan. Hållbarhet tycker vi har gjort på ett bra sätt. Vi har det med i alla delar. Det går inte att sätta hållbarhet som någon separat funktion och så säga så här, nu löser vi den uppgiften, utan det måste ner alla beslut och alla aktiviteter det vi gör. Sen naturligtvis, vi vill ju inte stanna här. Vi vill ju fortsätta både att utveckla de bolagen vi har, men framförallt också att hitta nya förvärv. Vi tittar kontinuerligt och vi är väldigt selektiva. Vi vill köpa bra bolag. Vi har ingen organisation för att göra turnarounds, utan vi vill köpa bra bolag som vi kan göra ännu bättre. Så det tackar jag för mig. Tack så mycket.
Tack Per-Arne. Tack. Men om vi tar vid där du slutade då. Ni letar efter bolag hela tiden. Ni vill förvärva bra bolag. Hur många sådana potentiella förvärv finns det, säg i Europa eller norra Europa?
Ja, men säg så här, det finns ju i alla fall minst ett bra Svedbergsbolag i varje geografi. Och sen det finns ett antal. Sen är ju inte alla tillgängliga. Vissa hänger ju i stora grupperingar. Men det kommer upp en del som är kontinuerligt. Jag tror inte att det är så att det inte finns någon pipeline, så det är svårt att hitta något. Det finns bolag, så är det. Och det här är ett sätt också för oss och mig att lära oss marknaden bättre. Vi tittar ju liksom naturligtvis i nya geografier också.
Om vi tittar på de 2 senaste förvärven ni har gjort, så har ni ju dels Rope Roads, det nämnde du tidigare också, ingen egen produktion, och sen har du Tebalux som har egen produktion, liknar Svedbergs huvudvarumärket, eller ja, det namngivande varumärket i alla fall, rent affärsmässigt ganska mycket. Finns det någon anledning att tänka åt det ena eller andra hållet i kommande förvärv?
Alltså vi är inte låsta i den delen. Det viktiga för oss är att det finns en hög grad av produktinnovation och man har ett starkt varumärke och ett bra sortiment. Sen om man då producerar det själv eller om man då i det här fallet som Roads har stark produktutveckling och så in, det lägger vi inte så stor vikt vid i det fallet då. Sen kan man väl nämna så att det finns ju möjlighet att något bolag också kan köpa produkter från något av de tillverkade bolagen också. Vi sätter ju inte stopp för det, men det är ingenting som jag styr och trycker på, utan det är mer så att säga det bolag som producerar kan ju säga så här har jag möjlighet att sälja till en intern kund. Ja, gör det.
Ja, där är vi ju lite på det temat. Så har vi sett bland annat badkar till Rope Roads nu från Svedbergs. Du nämnde att Tebalux varken har blandare, dusch eller badkar. Det finns ju andra varumärken inom gruppen som har de produkterna. Kan vi komma och se fler sådana initiativ framöver?
Ja, och det är så som vi driver är ju att jag vill ju bejaka de typerna av initiativ och ge möjligheterna. Men det är upp till varje vd och ledningsgrupp i landet att ta de besluten då. Men det är klart att när de ser den och så ser man att nu gör Up Roads det är klart att de har ju sin egen kanske design på vissa badkar. De kommer ju snabbare igång. Vi har ju någon i koncernen som kan den produktkategorin. Vi har en leverantörsbas i de här delarna. Vi har kunskap om EPD, hållbarhet på de här produkterna etc. Och det är klart att här är ju då, sen finns det ju alltid någon som säger så här, men det går inte, men allting går ju. Så att här är ju liksom sätt att få igång drivkraften, för jag tror mycket och vi bygger på att vi har motivation och drivkraften i det här. Så det är klart att sitter man och utvecklar bolaget i Holland så är det klart att det finns ett antal olika kategorier. Så måste man ha respekt för hur marknaden funkar, för det är olika strukturer i alla geografier, utan här gäller det att hitta hur kan vi komma ut till marknaden i så fall, möta kunden och göra ett bättre jobb än aktörerna idag.
Så nämnde du också ert marginalmål, 15% EBITDA. Ni är ju där. Tebalux Q1 då är EBITDA-marginalen 25%, trots att man håller på ganska mycket och integrerar sig i gruppen. Hur tänker du kring marginalmålet framåt?
Ja, alltså vi ska inte under det nu, det är så man kan se istället, nu är vi förbi det. Sen ibland får jag frågan så att när åker man ner liksom historiskt sett och är det inte för tufft? Ja, kan titta på Geberit. De är betydligt större och de ligger 30, då kan man istället säga så här, varför har inte ni mer? Varför tjänar ni inte mer pengar? Så att det där är också någon del i liksom vilken geografi och produkter du har, men någonstans är det ju liksom, jag tycker att det är ett betyg på hur duktiga vi är. Och där ser man ju Rope Roads som gör ett fantastiskt jobb, och där har vi ju liksom spelat in bollen lite från sidan till att så här, titta på de här bitarna, ska ni inte ta med det här? Och de har ju lyckats att plocka upp det liksom 4-5 pinnar liksom, mot när vi kom in och tittade på det. Så klart, det har de gjort fantastiskt bra. Och de ser ju att det som inte gick, det går ju.
Allt går.
Så det är
en sista fråga kanske då. Som du nämner så har den nordiska marknaden varit tuffare. Kan du säga någonting om tecken på återhämtning, timing på återhämtning eller något liknande, om du vågar spå lite?
Ja, det har rätt i, den skulle inte stå här. Men nej, men den är svår. Jag tror så här att man har väl sett på konsumentsidan, alltså det som köps nybyggnationer eller renovering där man går och köper det på en komfort eller en bad och värme eller bygg hemma i Sverige. Där tror jag man har bottnat. Och, ja, jag ser inte mer än man kanske känner så här, liksom, att det är lite mer spring i butiken, att det är lite, kan se en tendens uppåt. Projektsidan vill ju till att man startar med projekteringen av byggnationen innan den sätts igång. Så den kommer nog ta lite längre tid innan man får igång den. Sen är ju så, min syn är att Sverige är hårdare drabbat än övriga geografier. Vi är i Sverige och Finland är hårdare drabbat. Jag tror att det har med att göra att vi har en större andel rörliga bolag, vilket gör att den så säga, disponibla inkomsten har drabbats hårdare i Sverige med ränteuppgången än gjort i övriga geografier.
Marknaden har bottnat, tar vi med oss som avslutande ord. Med det får vi tacka Per-Arne för att du kom hit idag. Tack till er som har lyssnat. Hello and welcome back to ABG Sundal Collier's Investor Days. My name is Benjamin Wallstedt. I am an equity research analyst at the Stockholm consumer team. With me today, I have the CEO and CFO of Embellence Group to talk about their company. So please, go ahead.
Thank you very much. Thank you very much, and welcome to the presentation of Embellence Group. Yesterday, we had our first Capital Markets Day, so what we will present and share with you is a short version of that. And my name is Olle Svensk. I've been the CEO of this company since almost, or more or less 8 years, actually, so I'm starting to get into it. And with me today, I have Karin Lidén, CFO of Embellence Group. So let's get started. Our business. Well, we believe at Embellence Group that the rooms and the environment you're in affects your thoughts and emotions and feelings. And we want to be a part of that and of that surrounding and making an impact through the power of our design. We also have an ambition to be a leader in interior decoration with a certain focus on brands, on premium brands, but also especially on wallpaper, as well as complemented by other pattern-based and colorful categories such as rugs and textile. Our focus, well, that is to ensure the long-term success of our brands. We have 5 brands in our portfolio today, and each of them, we will support them and in their growth journey, but at the same time respect their uniqueness and special position in the market. And we will do that by providing each brand with what they need to develop, design, commercialize their products in their quality to their core customers, but at the same time doing the smart things and the meaningful things on an Embellence Group. But we have 5 brands, 1 manufacturing unit, but 5 brands. That's key for us, brands. So some fast facts then. We've been in premium wallpaper for 150 years, so we have been able to pick up a few things. We have 5 great brands. We have manufacturing we do at 3 sites. In weaving mill in Leksand for Papelina rugs. We have state-of-the-art digital printing in Italy for the customized wall and deco wallpaper. And then 1 larger manufacturing unit that is in Borås, producing wallpaper, mainly for Embellence brands, but also for external customers. And that's the site in Borås is the only one that we operate as a separate entity. Head office in Borås, brand offices in UK, Italy, and US. We are quite international as a company. Our products were bought in more than 100 countries last year, but Sweden, UK, Italy, and US being the largest one. Coming back to our brands and our manufacturing entity, I will want to give you a snapshot what they are. Where to start? Of course, in wallpaper, our core category, and of course with a brand that is kind of the starting point for us existing, and that's Produktionsteamet. Here is a design called Valdemar. It's a homage to the founder of Produktionsteamet, Valdemar Andrén, in 1905. And ever since then, I would say that Produktionsteamet is very much rooted in the Swedish heritage, with a lot of colors, patterns, the nature brought into the design. Very romantic collections, many of them as well. So Produktionsteamet, our largest brand, last year, revenue of 283 million. Sold in more than 65 countries, dominant countries, of course, Sweden. Our second largest brand in wallpaper, that's Cole & Son. It's the oldest brand, 1875, known for both for its rich history, with an archive of more than 1,500 block prints, and the oldest one are from the mid 18th century. Known for its commitment to craftsmanship, to artistic elegance, and hand painted many of them. 154 million last year, sold in more than 65 countries. UK and US by far the biggest market. Our third wallpaper brand, it's from Italy, Wall&Decò, innovation and design. Very powerful, strong design, but very innovative also when it comes to solutions. This is the reference brand in customized wallpaper for projects, offering classical indoor wallpaper, but also out system for facades or wet system for shower rooms or damp areas. 98 million last year, most international brand, more than 100 countries, Italy and Germany, the two biggest ones. Over the recent years, we have expanded and acquired company outside wallpaper. The first one was in 2021, and that's Pappelina. When we started to get to know more about Pappelina, it had many of the ingredients we were looking for. A clear position, a clear, quite clean design with a big connection to or very Scandinavian touch. Company is not big, it's 47 million, but quite international. Sold in more than 50 countries, Germany, Sweden, and US being the core ones. Then in 2022, we acquired another company outside wallpaper, and that's Artscape in US. And for me, it's very much like wallpaper for windows, both for privacy as well for being decorative, like this design here called New Leaf, which is sold a lot in the US market or well received there. Artscape predominantly sold in North America. We have very little sales outside North America. 111 million was the revenue last year. Participating in a category, window film, or present in a category that has had some challenging years, 22 and 23, but now is starting to pick up, and the market is growing around 5% right now. Then, last but not least, in 2022 we took an important decision internally that led to let Produktionsteamet focus on design, marketing and sales of their products, while we separated the production to another entity. Produktionsteamet has a lot of knowledge and experience in the category and is really resourceful when it comes to insights on material, on inks, different printing methodologies, whether it's surface print, very old, rich color, traditional way of printing, or very modern digital design. Produktionsteamet is mainly supplying internal brands, our internal Emblems brands, but also has a growing position with external companies and external brands. Last year reached a revenue of 48 million of external companies and or brands, and most of them from the Nordics. Let's talk a little bit about our market then. And as I said, the window film market is coming back to an okay growth rate. The rug market is huge. We are super small. So how the wind blows in the rug market is not really relevant to us, to be honest, because we have so much space to grow there. A category that the market wins is important for us, though, is wallpaper, as we have a big share there and have a strong position. So let's talk a little bit about that one. So the addressable the market opportunity in wallpaper. Let's start off the wallpaper sits in the interior decoration category, which is big. It's very large, fantastic place to be. $800 billion. 55% is furniture. So wallpaper is unfortunately not the biggest one, but if we zoom into the global market for wallpaper, the value is around $10 billion. 60% is residential, private persons to homes, and 40% is what is called contract, mainly to hospitality segment, to hotels, resorts, and restaurants. Our addressable market, well, that's $2 billion. because we are only participating in the premium part. We only want to focus, or we are only focusing on the premium part. Then, I mean, one important trigger point for the market behavior is actually the intent to renovate. Renovation is, a big trigger, an important trigger for us. And we continuously look at different indicators here, and one of them here I want to share with you, which is the homeowners renovation intention. Looking at 3 of our core markets: Sweden, UK, and US. If we start with the 2020 as index, we see that we had the increase during the COVID pandemic. Then it's been a challenged market in all 3 of them. US had held up fairly well, relatively, while UK is minus 27% compared to the starting point here. So the good news is, even though the market has been challenged, we have performed better. But there are also a couple of other good news is that there are indications that the market is starting to come back. A month ago, I was in mid-April, I was at Salone del Mobile, probably the most prominent and important interior decoration and furniture fair in the world. And they reported 20% more visitors than last year. So, I mean, a general buzz, a very positive buzz in these categories. And then I bumped into several people from different companies, to MDs and owners and what have you. And also in the industry of wallpaper, there is an opinion that this market will probably be flat this year. But there are indications that it start to pick up next year at 3-4%. So generally very positive market situation, I would say, coming from that. Talking about competitors then, well, wallpaper is a very fragmented landscape. You have many brands and players and labels as well. It's a large focus on volume and low price point. Actually, it's 75% is in the basic and mid segment. Several traditional national, legacy brands normally only focus on their domestic market, maybe do some export to a neighboring country. Very few larger players, very few with a revenue above 1 billion. But of course, we have new entrants in this category as well, taking the benefits of digital printing and selling directly to end consumers. And this is happening in Sweden and in UK and many other markets. So there are new entrants in the category as well. But if we take a quick look at the total market, how it's set up and divided. So there are 2 big or major types. It's the residential part, going to private homes, consumers make the decision. That's 60% of the market. This is where we're coming from. We're still our biggest part of the business. 40% of the market is contract, mainly serving hospitality market. And there are 2 major changes or dynamics in this one important to know is that the residential part, traditional retail is under pressure, and consumers are buying online in this category as well, directly from the brands like us or through online partners. So that's one part, traditional retail and that's our heritage, to be honest, to be present in physical retail. The other dynamic important to know is hospitality is growing and it's expected to outgrow the total category, partly because it's big investments into renovating hotel and also to some part building new hotels. But another important factor is wallpaper perceived as a very interesting alternative to tiles or stone, because it's more sustainable, easier to install, have a massive impact in terms of the surrounding and so on. So this is growing part of the market. Now coming to our strategy now, the updated strategy that we shared more or less 25 hours ago. So hot off the press, still the same. This is our way of creating shareholder value. So first of all, the foundation, which is how we are as a company, you could call it our culture, with entrepreneurial spirit, very creative, want to lead, being agile and fast as well in the market. We can do that through being decentralized as a company as well. So the brands and the production, manufacturing entity should be autonomous, but also responsive. So we support our brands from an ambulance standpoint with different functions. And then we have strong finances. That is also something that we have. You know, we have strong gross margins, nice cash flow, decent EBITDA. This is something that's us, kind of. But the change now is the 6 strategic growth areas. You see here on top here, and what we will focus on, you know, the coming 4 or 5 years. The first one is that we are dialing up our focus on organic growth. So we have dialing up. We are putting more focus on organic growth, and we will do that through continue to make our great brands even greater, nurturing our design icons by updating maybe with another color and refresh and so on, product innovation as well, expand into certain geographies. US I expect to be very important for us. It's already, but even further, and channels as well that are growing. Hospitality part and direct to consumer, what I talked about before. Continue to utilize group synergies, supporting our brands so they can do what they are best at while we support them on other things. And on M&A, we are zooming in and narrowing the focus. We will continue to have it as an element, but we are much more narrow on the kind of companies we're looking at. And to pick some of the areas to give you a bit more flavor, here on product innovation, I mean, we believe that desirable products can only come from sustainable businesses. And from a greenhouse gas emission standpoint, 72% of our footprint comes from the product. We're a product company. So that's where we have to start, right? And we have made some inroads over the last years that were world's first, actually, with Papelina launching Bio Edition, where it's bio-sourced carbon-neutral PVC with pine oil instead of fossil fuel, lowering dramatically the carbon footprint. Then, and here we took that insight and experience into Wall&decò beginning of this year. And here is where Embellence makes sense. So we in terms of product development. So Wall&decò launched Decodura, which is the world's first bio-based vinyl wallpaper with all the certificates in place. Fire rating, scratchability, durability, and with a 50% lower carbon footprint. And this we did in our Wall&decò's biggest category. And we just changed into that. Now dramatically lower the carbon footprint. And as an acknowledgement of that, last week we received the German Innovation Award for Decodura. Decodura is the name of this. Geography and channel expansion, very quick. We used to be very national with our brands. Last 4 or 5 years, we have internationalized our business, less dependent on 1 or 2 markets. We'll continue to do that. Certainly, I expect to grow in the US, in continental Europe, and through hospitality around the Mediterranean Sea. Direct consumer, we are present in 35 countries today. We do that mainly for brand building and to give the consumers, overview, whatever, all the alternatives we have. But it also gives us possibility to get fast feedbacks, especially on designs or coloring and so on. We will always sell at full retail price, and thereby, because we don't want to compete with our partners and dealers. But there we also have healthy gross margins in this part. Going forward, continue focus on the brand positioning, support the consumer or the customer on their journey. And for us, it doesn't matter if the customer buys from one of our partners or buy from us, as long as we give them a good customer journey and close the loop and close the deal, right? We will only open in markets where it's profitable for us. This is not, this is everything we will do. We are in 35 countries, so we'll probably open in some more, but it got to make sense as well. Hospitality, very quick, a large category or large sector, $4.7 trillion US dollar. I hardly know how much that is. Big part here is hospitality, but you also have other areas to decorate. You have restaurants and bars like this one here with the wall and deco, and you have the spas, the gyms, the country house, the golf clubs, where you have a lot of investments and a lot of money going into, and where wallpaper fits really well. We focus on the 4 and 5 stars. Hotel corridors is not our thing. I mean, we are right now starting to deliver products to a hotel project in Egypt, 350 rooms. We do 35 of them, and restaurant and the lounge. So not all of it. But there are 700,000 resorts in the world, and many rooms. US is expected to lead this. 70% of the hotel industry globally is actually run through US. Wallpaper is a winning share. I mean, premium hotels normally renovate every 3 to 5 years. Wallpaper offers a cost-efficient and fantastic way to decorate the wall, and we see increased demand for this as well. M&A, we are narrowing our focus on this, continue to be a part of the puzzle for us. But moving from, compared to the IPO, having more than 200 companies in target, now we have less than 20. With this said, I'm now handing over to Karin to talk about sustainability and finance.
Thank you, Ole. And I know we're running short of time, so I keep it sweet and crisp. The example of Papelina Wall and Deco collaboration that Ole shared earlier is one of the things we focus on and that we will focus on during the next years. First and foremost, improving the footprint for our products. We will also update our overall sustainability targets and commit to the science-based target initiatives during next year. And of course, be ready for CSRD when times come. As part of this update, we presented the new financial targets yesterday at our Capital Markets Day, where we have really only changed our sales target. Going from a company focusing on M&A with very aggressive growth targets that were primarily built on acquisitions to an organic growth-focused company means we need to change the sales target. So 1 billion SEK by 2028 means around 6% growth every year, and any M&A we do will come on top of this 1 billion. The other targets remain the same, profitability above 15% EBITDA, and dividend and leverage targets are the same. With that, I think that's all from us. Thank you very much.
Thank you very much. I have time for one question, I believe. Your financial targets, as you mentioned, imply a 6% sales CAGR. The wallpaper market is very mature. I would imagine the whole wallpaper market is not growing too dramatically, at least. And you also have, at least in Boråstapeter, a very strong market share. How do you imagine going to a 6% growth rate, please?
First of all, we have, during the last 3-4 years, right? 3 years, we have grown, our core brands has grown 2%, so we have performed better than the market. Now, listen to what the industry of wallpaper says, is opinion that the market will come back to a growth of 3-4% from 2025. So that will help us. But also the inroads we do with our own direct consumer, and even more importantly in hospitality, because that cake is growing and we are still very small and we want to take a bigger share of it. So that's how we will do it.
A market return and you will continue outperforming the market.
That's what we do, huh?
Yeah, perfect.
Okay.
With that, I think it is time to say goodbye to Olle and Karin. Stay tuned, more presentations will follow.
Hi, my name is Victor Rudstenloff, and I'm a real estate analyst here at ABG Sundal Collier. We're about to listen to a presentation from NIAB, a construction company. And with us today is Aku and Johan. And I'll hand over to you and then pose some questions after the presentation.
Thank you.
Thank you.
Very happy to be able to present our company today. This presentation will be held in Swedish and English. I will speak Swedish going forward. En bra dag efter drygt 2 år som listad på Nasdaq Helsinki så får jag hålla en presentation på svenska. Det är andra gången på drygt 2 år. Känns riktigt bra. 5-6 veckor så är vi listade i Sverige. Mitt namn är Johan Larsson. Jag är vd för NIAB, en av grundarna. Den andra grundaren är min yngre bror som är Chief Operating Officer.
Yeah, and good afternoon on my behalf also. My name is Aku Väliaho and I'm CFO at NIAB.
Så, NIAB, kort. Infrastruktur, energi och industriprojekt. Huvudsakligen som utförare. I vissa fall kan vi även äga projekt. Vi grundades 2013, 419 anställda. Vi har drygt 400 miljoner i positivt kassaflöde, rullande 12 vid slutet av Q1. Omsättningen översteg för första gången 300 miljoner euro, rullande 12 samma period. Förhoppningsvis kommer vi aldrig att gå under det igen, det vågar jag nästan lova. EBIT, det är ju lite tuffare makroekonomi och annat så vi ligger på lite lägre vinster än vad vi brukar göra. Om än många som ses som våra peers skulle vara supernöjda med det så är det lägre än vad vi har klarat av historiskt. Trots allt relativt bra siffror. För perioden högsta backloggen någonsin. Jämförbara tal. Vi har en negativ nettoskuld. Så sammantaget väldigt stark balansräkning. Superstark finansiell position. Och det är naturligtvis trevligt. Publiksektor ungefär 55% av vår volym. Vi delar upp publik och privat efter vilka som lyder under lagen om offentlig upphandling. Så i realiteten är publiksektorn några procent högre än det där. Dividend yield 2,6% landar det på. Ungefär 7/10 av vår volym sker i Sverige, 3/10 i Finland. För att veta vars vi är så är det bra att veta vars vi kommer ifrån. Och snabbt sammanfattat, 2013 började vår resa. 2017 skedde något väsentligt i att vi startade dotterbolaget NIAB Infrastruktur för att fokusera på infrastrukturbyggandet. 2018 översteg vi 100 anställda. 2019 passerade vi 1 miljard. Det var ett mål vi satte 2013 att senast 2020 skulle vi passera 1 miljard i volym med organisk tillväxt. 2021 så gick vi ut i december med nyheten att vi gör en reverse takeover av det listade bolaget Skarta som var noterat på Helsingforsbörsen. Den affären, closing var månadsskiftet mars-april 2022, så drygt 2 år som ett listat finskt bolag. 2023 så nådde vi 400 anställda och nu är vi alltså 1,5 månad från grovt räknat att ändra domicil och listning till Stockholmsbörsen. Den här säger väldigt mycket om oss och vilka vi är. 42% CAGR under den här perioden. En lönsam tillväxt som tillhör industrins bästa. Värt att förtydliga, 2 sista staplarna är mer eller mindre samma period med skillnaden att kvartal 1 2024 lagts till som påvisar våran fortsatta marginalförbättring för att röra oss mot historiska nivåer. Värt att nämna är att 2023 var naturligtvis ett år med makroekonomisk motvind. Euron som vi rapporterar i var väldigt stark mot den svaga kronan. Seasonality gjorde att vintern kom ungefär 6 veckor tidigare än vanligt, vilket hämmar vår produktion relativt kraftigt. Att vi ändå klarar av det relativt bra kan man nog säga att under de här inflation och räntehöjande tiderna så blir vi aldrig squeezade av vår egna finansiella position. Så det där är nästan att betrakta som ett worst case scenario, höll jag på att säga. Vi tog också mycket kostnader för kommande redomiciliation och omflyttning och la tid på det. Som för övrigt var våran plan redan när den här sammanslagningen gjordes. Sen så kom en invasion av Ukraina som gjorde att vi bestämde att det är så mycket osäkerheter så vi får nog ligga kvar på den här börsen ett tag. Snabbt och mer konkret det vi gör. Infrastruktur, vägar, broar, flygplatser, flygfält, järnväg. All typ av infrastruktur, vattenavlopp och dylikt. Även underhåll av detsamma. När det gäller energi, power network och substation construction. Och så bygger vi Finlands största solkraftpark i talande stund. Ett kontrakt på cirka 800 miljoner kronor. Och industrin hjälper vi på väldigt många områden. Framförallt så är det den tunga basindustrin. Stora gruvbolag, papper och skog. Volymerna är ganska talande rent så när man ser mellan länderna. Infrastruktur pysslar vi huvudsakligen med i Sverige. Den låg volym av det i Finland. När det gäller energi så är vi större i Finland än i Sverige. Åtminstone ett tag till. Vi har en ordentlig tillväxt på det där området i Sverige. Inte minst i och med Svenska kraftnäts stora satsningar. Vattenfall med flera. Som ni ser har vi väldigt stora stabila kunder. Stadiga. Det är vi tacksamma för. Och när det gäller industrin så är 2/3 av volymen på ett ungefär i Sverige och 1/3 i Finland. Mer konkret projekt. Värt att nämna det här sammanhanget för att man ska förstå vår lönsamhet och annat är att vi förutom enskilda projekt som highlightas här har över 30 fleråriga avtal, ramavtal, collaborative contracts av den sorten som gör att vi i hög utsträckning kan välja våra projekt. Vi sätter oss inte i positionen att vi är tvingade att vinna projekt. Opto 2.0, ett talande infrastrukturprojekt. Jag tror att vi just vann vårt 6:e kontrakt. Inte annonserat ännu, men Trafikverkets fördel är såklart att det är samma förutsättningar över hela Sverige. Det är en skalbar affär. Och de här projekten görs för att möjliggöra en kontinental tågtrafik. Så att du har samma signalsystem i alla länder. Det är bara Finland som faller lite utanför för att de har rysk spårbredd på rälsen. Vi hoppas såklart att de ska förstå värdet av att bredda spåren och även införa det här signalsystemet där på den marknaden där vi verkar. När det gäller energi, Finlands största solenergipark i Utajärvi. Industri, det satsas väldigt mycket upp i norra Sverige. Stora investeringar. En batterianodfabrik för talga, grafitbatterier. Där vi gör mark- och infrastrukturarbeten. Sen så har vi vunnit våra hittills största kontrakt och påbörja arbeten där för ett knappt halvår sedan. Aurora Line, kontraktsvärde på en dryg miljard. Och Finland som tydligt har deklarerat att de ska bli en energiexporterande nation. Är det här ett viktigt projekt för det ökar flexibiliteten och möjligheten att skicka och hämta el mellan de olika marknaderna. Tillsammans med att det blir ett förändrat tillverkningen av energi sker på ett nytt sätt i och med framstegen i förnyelsebar energi. Allting kommer inte i princip från älven som det har varit i Sverige i hög utsträckning, framförallt de norra delarna. Så många nya energikällor. Och det man då kan sammanfatta i det här, blandad tur och skicklighet, men vi har exponerat oss mot växande marknader. Marknader vi tror på. De här 3 megatrenderna är högst drivande. I green transition så sker det mängder av investeringar och vi ser alla att vi behöver minska fossil energi, ersätta med förnyelsebar och annat. Väldigt stora investeringar framöver. Deglobalization är det som driver bland annat NATO-inträde naturligtvis, med de investeringar som måste till och kommer av det. Sen så har du störningarna i leveranskedjor som har uppmärksammat många stora industrikunder och annat. Säkerställa att i den mån det är möjligt så har vi produktion i landet här hemma istället för att vi måste handla det av nationer som kanske inte fullt ut är långsiktigt pålitliga eller demokratiska. Och där ser vi stora satsningar och kommande satsningar från gruvbolag. Alltså det handlar om jordartsmineraler och annat EV som kommer att behövas i elektrifieringen. Där vi har det på stora upplag som rester från tidigare gruvdrift. Driver den och så har vi den gamla godingen, urbaniseringen. Ingen nyhet för någon. Den har ju varit drivande ganska många decennier. Skapar mycket investeringar. Och tar man ner det då och försöker sig på att kvantifiera det i siffror så ser vi att generellt i Sverige bra växande marknader. Går man med specifikt där vi har vår högsta marknadsnärvaro, Norrbotten, så är det riktigt höga siffror. Finland rör sig numera sidledes på en behaglig och stadig nivå. Sen är det klart att vissa siffror är säkrare och vissa är mindre säkra. När det gäller trafikverk och statliga investeringar överlag så har en väldigt hög träffsäkerhet på utfallen. Och vissa andra finns det mer eller mindre osäkerhet i. Sammantaget hela bilden så tror vi att volymtillväxten är ännu större i våra segment. Framförallt drivet att man inte har tagit hänsyn till klimatpåverkan, vad som behöver ändras i infrastruktur och annat, där vi redan ser förändringar. Siffrorna, vad som behövs i och med NATO-inträdet, flytta trupper över Nordkalotten och annat, hamnar behöver fördjupas och så vidare. Och så sen så tror vi att det är möjligt att green transition-relaterade investeringar, att det är lite lägre investeringsnivå än vad man presenterar nu. Det går att ifrågasätta den ekonomiska livskraften på en del investeringar som det pratas om. Men oavsett så är det en större tillkommande marknad.
All right.
Då lämnar jag till dig, Jakob.
Yes, thanks. So, then a bit more detailed overview on our asset-light operating model. Our key employees, which we offer, are project managers, engineers, site managers, and of course project calculators. Typically, we operate as a main contractor in the construction projects and focus on the first parts and the most value-adding parts of the construction project, i.e. the project development and project management. We tend to subcontract vast majority of the labor and machinery during the project, and this is also visible in our KPIs, so that we have roughly 70% of white collars among our employees. From P&L-driven variable cost share from the total costs is roughly 85%, which means that we have an extremely flexible business model. And also, last but not least, we generate over 10% of service contracting revenue, which basically then enables us to be selective in choosing the right projects. As Johan mentioned, this has led to industry-leading profitability. So our last 5-year EBIT margin is on average above 9%. Our revenue per employee is industry high, almost 700,000 euros. And maybe not going too much into details for the 23, as Johan already explained, but we did experience some micro headwinds and also incurred increased costs relating to this redomiciliation and listing transfer. So we have basically 4 levers that separate our business from the competitors. So the first lever is the sector focus. We operate in the sectors where we have the competence and the know-how, and also try to stay away from highly cyclical parts of this industry, such as housing. As mentioned, we pay close attention to project selection. For example, we try to identify projects which has potential to increase from its initial scope, and that then enables, of course, better margins. This magic is enabled, of course, by our skilled employees, so the project management and the high level of competence there. And then on the fourth lever, we are very frugal on fixed costs, which then enable, for example, us to be selective in choosing the right projects. And people are our most important asset. We take good care of them, and this is also visible in the KPIs. For example, our eNPS is almost 3 times better compared to the industry average. At the same time, health and safety is very important to us, and that is also illustrated on lower LTIF4 figures compared to the industry average. These pictures show our quarterly development for the last couple of years. Maybe just to focus on a bigger picture that, as Johan already mentioned, we generate lower amount of volumes during the H1, and then during the H2 we generate the majority of the volumes. In Q1 we experienced very good result, so that our revenue was growing by over 50%. And that also enabled a profitability improvement, where our EBIT margin increased by 5.9 percentage points. We generated very healthy cash flow for last 12 months, so approximately 35 million euros, mainly coming from the working capital release and of course from the profitability improvement as well. And our balance sheet is strong. We have a minus 0.8 net debt to EBITDA.
I think we might be pressed for time.
Okay.
So maybe we can. I'll shoot some questions, and then probably we'll catch up on some of these things.
Yes, let's do it.
Yeah. But just touching on your what sets you apart from other construction companies.
Yeah.
So obviously you have a slightly stronger operating margin as well. But then, Akko, you mentioned that you have this asset-light model. Do you want to talk a little bit about maybe what kind of capital returns that you're seeing compared to other peers in the sector? So on returns on capital employed, for example, or some similar metric.
Yeah. So at the moment, our reported return on capital employed was a bit below 10. That's mainly due to technicality that we have some goodwill in the balance sheet. So clean from that, we can expect somewhere around 20% return on capital employed.
And how does that compare to other peers in the sector?
They are high.
Yeah. Very good. And so you mentioned that the headwinds that, or the tailwinds rather, that you see with the structural trends. But then you're also very focused on this part of Scandinavia that is booming at the moment with all the new investment and focus, certainly. Am I correct to say that you're about 80% in the northern parts of Sweden and Finland-ish?
Yeah, roughly.
Roughly. Then you've also started making advancements in the southern parts of Sweden. Do you want to talk a little bit maybe about what your plan is going forward there?
Yeah, we knew and were convinced ourselves that our affärsmodell håller på alla marknader. Så vi tänkte vi provar i den hårdast konkurrensutsatta, tuffaste marknaden Stockholm. Så 2019 etablerade vi oss i Stockholm, 2020 var första helåret. Organisk tillväxt från att ha anställt först 1, sen 2, sen 3 och så vidare. Så har vi nu byggt det till en volym att i år så landar volymen roughly någonstans runt 800 miljoner SEK och vi har legat på en lönsamhet runt 10% där historiskt. Så det har väl då möjligt gjort oss ännu mer övertygade. Och vi kör på tillväxt i nya geografier likväl. Sen så gör vi jobb över hela Sverige om än vi inte är etablerade. Vi följer kunder och så vidare och har en hel del uppdrag runt Småland och på västkusten nu vann vi ett nyligen. Så ser det ut. Sen när det gäller våran lätta capex och våra låga fixkost så finns det väl några i sammanhanget som går att förklara och värdet av att just kunna välja våra projekt, det är en av anledningarna till att vi är asset light, men det är också organisationellt. Historiskt så är det kyrkan och militären som har satt de här organisationsschemana. Sen kom industriella revolutionen. Man fortsatte göra lika stelt och fyrkantigt. Det vi gör är att det är inte lika låsta roller i varje ruta. Det är mer flexibilitet. Det kräver lite mer av ledare och chefer, men för att skapa bästa möjliga lag som leder projekten. Och det är en stor del av att vi har en högre grad av flexibilitet i det här bolaget.
You mentioned that you look and you're very specific in which projects you choose to bid on and pursue. Out of 100 projects that you look at, how many on average or roughly do you say yes to? How selective are you?
Less than 10%.
Okay. And the ones that you do select then, what makes you select them? What are they?
Different reasons. Of course, we want to know that we have good capabilities and best organization for it and so on. But it could be for different various reasons. Seasonality on the project, size of the project, new client, good something we want to be a part of and so on.
Very good. I think just as the last question, what was NIAB stand for?
It doesn't stand for anything.
Okay.
It's just a new company.
Just a name. Okay. Very good. I think that's all the questions we have time for. Thank you very much. And you'll stay around a little bit after here as well. Thank you very much.
Thanks.
Thank you.
Hej och varmt välkomna till nästa presentation här på ABG Investor Days. Jag heter Simon Granat, jobbar som analytiker på ABG där jag följer IT- och teknologibolag och där ibland så följer jag Bredband2. Och idag så har vi nöjet att presentera VD Daniel Krok som under kommande 15-20 minuterna ska presentera verksamheten. Och sen därefter så följer vi upp med en frågestund. Så med det sagt Daniel, välkommen.
Stort tack för det. Kul att vara här. Och som nämnt, Daniel Krok och har varit vd i det här bolaget sedan väldigt lång tid tillbaka, 2007. Då var det ett litet bolag med väldigt stora problem. Så därför är det glädjande att vi är på en positiv resa och där vi är idag. Agendan är lite kortfattat vad vi gör för någonting. Varför det kan vara intressant att investera i bolaget. Sen har vi en relativt färsk rapport som har kommit ut. Och så givetvis så har vi framtidsbilden. Och spännande frågor. Det ser vi framåt. Vi är tredje störst på fibermarknaden då. Det är vår absolut kärna. Det är det vi har jobbat med från allra första början. Och vi är också måna om att hålla tydligt fokus. För oss är det viktigt som en lite mindre spelare att just vara väldigt fokuserad och se till att vi blir riktigt vassa på det vi gör. Och det är privat- och företagsmarknaden som vi jobbar med båda. Privatmarknaden är ju den större delen. Det är ungefär 75% av omsättningen och såklart där vi har de flesta kunderna. Och företagssidan som har en större bredd i sin produkt- och tjänsteportfölj är den andra delen. Vi kommer med till det lite senare. Och omsatte 1,6 miljarder föregående år. Och fram till att vi gjorde ett lite större förvärv av A3, eller lite större kanske var fel uttryck, för de var faktiskt större än vad vi var när vi förvärvade dem vid det tillfället. För ett par år sedan så har vi växt helt organiskt under den fasen innan. Så för oss så känner vi oss väldigt mogna och redo att just vara med och konsolidera marknaden. Och det har varit ett väldigt lyckat förvärv där A3 hade en del utmaningar. Men vi såg ju att om vi kunde få in det här i vår struktur, vår organisation, våra system och få upp effektiviteten och nå de nyckeltalen så skulle det såklart vara en perfekt match. Och det lyckades vi ju med förra året. Att den volymen där de egentligen hade fått inte ut någonting på sista raden så fick vi upp nyckeltalsnivåerna till de nivåerna som vi själva hade haft. Plus att den samlade volymen lyfte oss ytterligare det. Så att det har varit en väldigt viktig och givande resa. Och det är en del av vår framtida ambition också. Att såklart ha en stark egen motor samtidigt som vi ska kunna vara med i konsolideringen på marknaden framöver. En milstolpe nådde vi här nyligen också. 500 000 kunder, vilket känns fantastiskt att kunna ta oss upp på den nivån som just stärkte positionen till att bli tredje störst igen. Och det var en mix av just det. Vi förvärvade ett bolag relativt nyligen som vi fick tillträde till 1 februari, Stockholms stadsnät, som var ett perfekt förvärv för oss. Också ett fokuserat bolag på bostadsrättsföreningar och fastighetsägare. En affär som vi har jobbat med under lång tid. Fick tillträde 1 februari och efter 3 månader så har vi integrerat hela bolaget in i vår verksamhet och gjort de förändringarna som vi har behövt göra. Både på systemsidan, infrastruktursidan och så vidare. Och det är just den effektiviteten som kommer bli viktig framåt också. Och sen hade vi en egen tillväxt på dryga 4 000, snarare närmare 5 000 kunder i Q1. Vilket vi också indikerade redan efter föregående år som var högt fokus på ökad lönsamhet till att nu växla om och se till att vi har full gas och ska växa så mycket som vi kan under året. Starka kassaflöden, det är återkommande intäkter vilket skapar en stabilitet i verksamheten och så blir det också väldigt starka kassaflöden som kommer framöver. Vi har en förskottsfaktureringsmodell som gör att när vi växer så blir det faktiskt ett accelererande kassaflöde, vilket är väldigt tacksamt. Samtidigt så är det ett skydd. Om det skulle vara en situation där kunder exempelvis kanske inte betalar och liknande så kan vi snabbt stänga kostnadssidan och inte förlora så mycket i den faktiska affären kopplat till respektive kund. Så det finns många fördelar med det. En smidig och trygg digital vardag för alla. Det är vår vision. Och vad betyder det då? Jo, Vi vill följa våra kunder i uppkopplingen. Den fasta anslutningen som vi pratade om precis på fiber till hemmet eller till kontoret. Och sen i hemmet på kontoret så är det klart att då vill man ju ha en trådlös tillgång till uppkopplingen. Och går man utanför hemmet och kontoret och ska göra en förflyttning så vill man såklart ha en bra uppkoppling där också. Och vi har ju en mobilsida där vi har den mobila uppkopplingen också. Så att vi vill ju såklart följa våra kunder i alla lägen. Men vi vet ju också med den förändringen som sker i samhället att IT och uppkoppling och allting som mer och mer blir digitalt gör att det blir mer och mer risker. Det är ju väldigt många som hamnar i problem både på privatsidan och på företagssidan. Där företag blir kidnappade av någon som har kommit åt känslig data och så vill de ha ut pengar, annars så fryser de detta eller skickar ut det i darknet eller något liknande. Och det är någonting som ökar dramatiskt. Och tyvärr är det så, speciellt på små och medelstora företag, att de har utmaningar att hantera detta. Och samtidigt så ser vi också att de är mer reaktiva. Det är när det händer som man gör någonting. Och det är ju alltid bättre att ta försäkringen på förhand och se till att man är skyddad och gör ett proaktivt arbete. Och det är det som är tryggheten i den digitala vardagen. Att vi kan också skydda uppkopplingen när kunderna är inne i den digitala världen. Tittar vi på kartan, det här är ju en bit tillbaka för det är PTS siffror. Så de har ju återkommande statistik var 6:e månad. Men efter detta så har ju det här förvärvet av Stockholms stadsnät kommit. Plus att vi har haft en egen tillväxt på toppen av det. Så att vi är i en starkare marknadsposition än detta också. Och snarare skulle jag säga närmare oss 15%. Som nämnt, datakommunikation, vårt största ben. Sen har vi det här med telefoni och växlar. Som jag nämnde, att man ska kunna även förflytta sig med 5G och liknande. Där har vi har en fortsatt stark ambition att det ska bli ett större ben i bolaget. Och sen då säkerhetsbenen som jag nämnde här nyligen också. Så det här är de 3 fokusområdena, affärsområdena som vi kommer jobba vidare med. Och inom just telefoni och växlar och framförallt säkerhet så finns det en ganska stor möjlighet att jobba i bredden, speciellt på företagssidan. Där vill vi ha den röda tråden att det ska vara skalbara tjänster. Vi ska inte behöva växa med omsättning och då möta det med ökad personal. Utan snarare så vill vi kunna jobba med tjänster som bygger på egentligen datakommunikation i botten för att då kunna ha den här skalbarheten. Inte konsulteri. Det finns andra som kan jobba med den delen helt enkelt. Och inom säkerhet då har vi till exempel DDoS-skydd. Attacker, att man skyddar kunderna från att bli attackerade. Och att de inte liksom stänger ner till exempel hemsidor och liknande. Redundans. Det här är också en sån del som jag nämnde att man ska vara proaktiv i hur man sätter upp det. Och redundansen handlar mer om att när du har en uppkoppling, även om det är en fiber, så kan den faktiskt sluta fungera. Det kan vara en hårdvarudel som slutar fungera, eller det kan vara så att det är en grävmaskin som av någon anledning gräver av det, eller i fastigheten att de håller på med något arbete. Och då är det ju bra om man har en redundans, alltså en annan uppkopplingsform, till exempel mobil, som tillfälligt kommer in och skyddar. Så det är den typen av redundanslösningar. Och så brandväggar såklart som är ett ytterligare skydd för detta. Om vi då tittar på senaste rapporten och siffrorna så har vi ju det här utdraget. Vi hade under den här perioden jämfört med förra året dryga 8% tillväxt och haft jämfört då med föregående år en riktigt trevlig resultatförbättring. Och det var ju det att vi hade det höga fokuset förra året på att lyfta alla marginaler och det har vi ju med oss in i detta året. Det var egentligen andra halvan av föregående år som vi hade det riktigt stora marginallyftet. Och det är som sagt det som vi jobbar vidare med. Sen ska man ju såklart vara medveten om framåt nu när vi har högt tillväxtfokus. Det är ju den här dynamiken att har vi hög tillväxt, alltså vi är aggressivare med marknadsföringsaktiviteter, aggressivare med prissättning, aggressivare på kampanjerbjudanden och vi får in ökade volymer där, då har det en kortsiktig påverkan på bruttomarginalen till exempel med kampanjerna och de lägre prisbilderna med den nya omsättningen som kommer in. Och sen så kanske man då tappar viss omsättning som har högre marginal. Och samtidigt med övriga kostnader om vi har marknadsföringsaktiviteter. Men vi har sett historiskt och vi vet ju själva att vi långsiktigt hämtar upp marginalerna över tid. Så att för oss är det prioriterat just med tillväxten och se till att vi ökar volymen i detta året. Och det här summerar vi lite kort från vd-ordet, var vi står och vad vi har för tankar framåt. Positivt nettointag av bredbandskunder. Vi ser fortsatt att vi får en fin effekt av arbete som gör ut mot marknaden nu. När det gäller att växa så vår ambition är att fortsätta växa organiskt. Och sen tittar vi ju på olika förvärv, men det är viktigt för oss att det ska vara rätt förvärv, inte bara för förvärvandets skull utan att det ska faktiskt vara rätt förvärv så vi kan hålla vårt fokus och uppnå rätt synergier. Så att detta är planen framåt helt enkelt. Tittar vi historiskt på omsättning och kundutveckling så kan man väl ganska tydligt se i alla fall var A3-förvärvet skedde. Och det har ju präglat mycket av det arbete som har varit under den här tiden. Men som sagt, vi har verkligen fått ut till och med mer än man kanske skulle kunna förvänta sig av det förvärvet med tanke både på omsättning och lönsamhet. Och nu är ju det fullt integrerat så att vi kan ha fokus på framtiden på bästa möjliga sätt. Och just framtiden, utöver tillväxt, så är ju digitaliseringen väldigt viktig för oss. Vi har ett högt fokus, har alltid haft ett högt fokus just på att jobba med digitaliseringen. Historiskt har det varit mest att ha den här ryggraden. Vi har ett egenutvecklat system, BOSS, som vi nu har väldigt mycket nytta av när vi gör de här förvärven. För då kan vi på ett effektivt sätt få in allting i vår ryggrad, i våra system. Och där har det handlat om att ha en hög effektivitet i bolaget. Vi vill ju vara en slimmad organisation som har en hög effektivitet, en låg kostnadskostym för att kunna då ha de här attraktiva marknadspriserna och på så sätt kunna vinna marknad. Det är viktigt för oss och det är det vi vill bibehålla framåt. Men det vi satsar mer på nu i det digitala är ju att köpresan ska bli mer digital. Både på privatsidan och på företagssidan så har vi ett antal digitala tillväxtdrivare som vi fokuserar på, som vi nu rullar ut under det här första halvåret, som ska bidra också till den här tillväxten som vi ser framför oss. Och det är ju också i linje med att vi ska hålla just den här höga effektiviteten. Och sen har vi det här AI som många pratar om. Ja, det är klart att vi följer allt som har med AI att göra. Det kommer förändra, det har förändrat väldigt mycket för alla branscher. Vi har redan idag aktiviteter, framförallt på servicecenter, där vi jobbar med en bättre avläsning egentligen av allt tal som kommer in. Så att vi kan se på ett bättre sätt vad egentligen kunderna i dialog med våra servicemedarbetare har, och sen så kan vi jobba med den datan på ett effektivt sätt. Och sen har vi på systemavdelningen, redan idag så kan man ju få en hel del kod serverad och sen bygga vidare utifrån det som ökar effektiviteten. Marknadsavdelningen på samma sätt. Det finns ju väldigt mycket som man både i text och bild och rörlig materia kan liksom ta det första steget. 70% klart och sen så finslipar man på toppen av det. Så redan idag så finns ju det här i verksamheten och vi kommer följa det noggrant framåt. Vi kommer inte vara edge, det är dyrt att vara edge, utan vi vill gärna följa och använda bevisade modeller som vi sen snabbt tar in i verksamheten för att få full nytta helt enkelt. Så det var det jag hade så här långt och då hoppas vi på lite kul frågor.
Strålande. Absolut, vi har ett gäng frågor som jag skulle vilja djupdyka lite i. Om vi börjar på det här förvärvet som du nämner, Stockholms stadsnät. Kan du tala lite om deras position i marknaden? De fokuserar mer på BRF, bostadsrättsföreningar. Är det ett prioriterat fokusområde för er framöver eller hur tycker man ska se på den delen?
Absolut. Vi kan säga att ursprungligen faktiskt om vi tittar långt tillbaka när bredbandsbolaget kom igång, som var lite starten på hela fiberutrullningen i Sverige, så var det just till bostadsrättsföreningar som man gick och kopplade upp de här bestånden. Och även för oss långt tillbaka i tiden så var det ju det som var starten. Sen är ju öppna nät, alltså det finns ju olika öar, det är kommuner och det är olika aktörer på marknaden som har en infrastruktur som man delar med sig med olika ISP, alltså som vi levererar till slutkunder i det här öppna näten. Det är den stora marknaden. Men de här exklusiva näten som vi kallar dem, just bostadsrättsföreningar och fastighetsägare, där vi ensamt levererar till alla i det beståndet, är en stor affär hos oss och har alltid varit. Men vi har väl tycker att vi kan få ut mycket mer av det. Så att detta förvärvet var ju inte bara ett kundförvärv där vi fick kunder och de är fokuserade på Stockholm. Men de har också en stark och bra säljstyrka med mycket kompetens, gedigen kompetens en lång tid tillbaka. Och den kan vi nu använda, så vi har brytit ut den enheten i Bredband2 idag och bildat ett tydligare eget affärsområde för att öka fokus på den affären med tillskottet av den kompetensen som kommer. Så det blir väldigt spännande att följa. Och de kommer ju då givetvis ha det nationella perspektivet, inte bara Stockholm.
Mm. Mycket intressant. Och vi har ju tidigare diskuterat om att ni även kunde utvinna stordriftsfördelar i termer av kostnadssynergier från det här förvärvet.
Absolut.
Känner du att ni har fått ut det mesta? Det konsoliderades ju 1 februari, så det har ju gått ganska snabbt. Eller kan det finnas ännu mer att hitta?
Alltså det kommer alltid finnas mer att hitta och mer att effektivisera kring infrastruktur och liknande. Men det är någonting som ligger i DNA hela tiden. Att det gäller att jaga kostnader hela tiden och på leverantörerna och se till att man liksom hittar den billigaste och bästa strukturen för den situationen som man har. Men vi såg ju redan innan förvärvet när vi analyserade att det var ordning och reda. Det var tydligt den exklusiva nätaffären plus att de hade en företagsaffär. Så att vi kunde ju förbereda oss väl. Så att när vi väl fick tillträdet så var det inte så att nu börjar vi. Utan då hade vi ju redan gjort förberedande arbete. Och vissa saker hade vi redan genomfört i samråd med dem innan. Så att vi kunde göra det här på den korta tiden. Och för oss är det viktigt att göra det snabbt så att vi sen kan komma in i rätt fokus. Och det är ju det framtida. Och inte hålla på med massa integrationer där man står stilla.
Mm. Och från mig som extern bedömare så låter det som ett klockrent förvärv. Känner du att det finns fler liknande objekt där ute som ni har identifierat som ni skulle kunna exekvera på? Eller när du pratar förvärv, är det några andra typer av karaktärsdrag som ni i synnerhet letar efter?
Alltså det finns ett antal spännande förvärvsobjekt att titta på, allt från små. Och för oss så kan det handla om att det är 1000 kunder som vi kan enkelt ta in i vår verksamhet. Och sen är det från den skalan upp till lite större. Men det kan ju också vara förvärv där man vill stärka upp något av de benen som är telefoni eller säkerhet. Och där finns det ju ytterligare förvärv. Tittar vi på telefoni till exempel så får vi samma synergieffekt om vi skulle köpa in kunder på mobilsidan och lägga på våra plattformar och vår organisation. Så det är också attraktivt för oss. Det blir precis samma effekt som om vi förvärvar på fibersidan. Och sen på säkerhetssidan så skulle det mer handla om att vi skulle stärka upp det benet för att få synergin på så sätt att vi kan sälja ytterligare säkerhetstjänster till befintlig kundbas, skulle jag säga.
Mm. Vad tycker du man ska se på er prisstrategi framöver? Känner du att ni tydligare vill flytta er mot något segment? Kanske tydligare mot ett lågprissegment eller mot ett premiumsegment? Är det något sådant ni har i strategin på lite längre tid?
Alltså vi har alltid försökt hålla en attraktiv prisbild. Vilket betyder att vi vill liksom hålla oss i det lite lägre segmentet, billigare segmentet. Just för att vi vet att för konsumenten, när man är vid köpbeslutet, så är priset framförallt det lättaste och i många fall också avgörande för att fatta beslut. Nej, men jag väljer den tjänsten eller den leverantören. Och tillbaka till att vi bygger organisationen, vi är fokuserade, vi har hög automatisering, en låg kostnadskostym så kan vi ha attraktiva priser och ändå ha fina marginaler. Så att vår prispunkt, både på privatsidan och på företagssidan, har vi ambitionen att vara där.
Mm. Och det tycker jag ni har visat på att det finns en skalbarhet på kostnadssidan att finna även i det här segmentet.
Absolut.
Hur ser ni på prisförändringar i närtid här? Det har varit prat om lite ökade nätverksavgifter. Är det någonting som ni har mitigerat i termer av ökade priser? Eller hur ska vi se på resterande delen av 2024?
Precis. Nej, men historiskt, det går lite i vågor, men om vi då, just här med nätavgifter, det är att i de här öppna näten som jag nämnde, där vi är ett antal tjänsteleverantörer som hyr in oss på en gemensam infrastruktur som någon administrerar och hanterar, då betalar vi en rörlig avgift för den aktiva kunden och den faktiska tjänsten. Och de avgifterna har vid olika tillfällen höjts från vår leverantör, och då måste vi såklart möta den kostnadsökningen mot våra kunder. Så att där var ju förra året ett år där det var väldigt många nätavgifter som ökade, men trots det så kunde vi förbättra våra marginaler. I år så ser vi inte alls samma situation, utan det sker vissa förändringar, men det är faktiskt mer att man också ändrar tjänster. Man tar bort vissa tjänster som man logiskt sett bör ta bort. Men då tvingas ju kunderna gå upp till en kanske högre kapacitet som har en högre nätavgift. Och för oss så blir det ju ändå en prisfaktor som vi måste hantera. Vi valde att inte möta det fullt ut i Q1. Där det var vissa kostnader som hade ökat. Och vi kommer i maj ha ett tillfälle där vi kommer då hantera det som har varit fram till dess, för det kommer några ökningar i maj också. Men det här är ju pågående arbete hela tiden, att försöka liksom hålla styr på det helt enkelt.
Mm. Och känner du att det kan finnas någon risk för kundintaget här i Q2 på grund av att ni höjer priserna något? Å andra sidan så når det på marknadsföringsaktiviteter, vilket borde mitigera kan jag tycka. Hur tycker du man ska balansera de två benen?
Alltså om det är så att vi gör, om vi är tillbaka till föregående år, då såg vi att vi hade ju perioder där vi fick göra stora prishöjningar. Och det är klart att då ökar ju rörelsen i kundbasen och körnen ökar, det säger sig själv. Men nu tycker jag att vi har liksom en balans där vi ska kunna ha ett positivt kundintag trots att vi gör vissa prisjusteringar som vi gör då i maj till exempel.
Och på annat håll så pratade ni i Q1 om att orderaktiviteten i företagsaffären har visat på stora framsteg. Kan du tala lite om vad ni genomfört de senaste åren i termer av centralisering och utsikterna ser ut för företagsaffären isolerat?
Exakt. Nej, men företagsaffären kan vara lite svårare att följa också. Om vi tar tillbaka till A3-förvärvet så var ju egentligen vår förhoppning där var att vi skulle få in en säljstyrka som vi kunde bygga vidare på. Det visade sig att det var inte riktigt så som vi hade hoppats. Så att då fick vi på något sätt starta om. Och det tar ju tid att bygga en säljorganisation. För att när en säljare väl kommer in så ska säljaren lära sig bolaget, lära sig produkterna och tjänsterna, lära känna marknaden, börja ta kontakt med marknaden och få en pipe med potentiella kunder, och sen så ska de faktiskt skriva ett avtal och sen så ska det avtalet in för leverans. Det är en ganska lång kedja. Men där bestämde vi oss för att vi centraliserar, vårt fokus är små och medelstora företag. Och där har vi nu de digitala tillväxtdrivarna som kommer hjälpa det också just till den marknaden som är mer lik privatmarknaden i köpbeteendet. Och att vi centraliserar det till framförallt Malmö. Och där har vi under en ganska lång tid sett en positiv utveckling i försäljningen. Och även då i en grupp som jobbar med befintliga kunder. Att även den trendmässigt rör sig i rätt riktning. Sen har vi säljer till större företag. Det är lite mer vågigt. Men nu när vi har då de här exklusiva nätfokuset från Stockholms stadsnät så förväntar vi oss också att den kommer ha en fin trendutveckling framåt. Så att många bra saker händer inom företagssidan. Och sen är det också att vi har tagit bort en hel del omsättning från företagsomsättningen från framförallt A3. De hade ju säkerhetsdelar, IT-konsulter som inte var vår framtid. Och då tog vi bort det och det minskar ju omsättningen som fick pareras med annan. Och Kammarkollegiet, när det kommer till telefoni, har vi också valt att gå ur. Det innebär ju att de upphandlingarna som görs i Kammarkollegiet, där vi har kunder, kan vi ju inte vara med vidare. Men det är ju strategiska beslut som handlar om att det kostar mer än vad det smakar att hålla på med det. Och därför väljer vi bort det. Så därför så kan det se ut som att företagsförsäljningens omsättning kanske inte har rört sig så här tydligt uppåt. Men väger man in allting så ser vi att trendmässigt så rör det sig i rätt riktning. Och för oss är det långsiktiga mest intressant.
Låter som att det banar vägen för ett år av tillväxt efter att ha fokuserat mycket på marginalerna 2023.
Det är vår ambition.
Mycket bra. Klockan är slagen, så stort tack för att du kom hit idag, Daniel, och tack alla andra, så avslutar vi här helt enkelt. Tack.
Tack så mycket.
Hello and welcome back everyone to ABG Investor Days. My name is Henrik Hintze and I'm an analyst here at ABG. With me now I have the CEO of Freemelt, a company that I cover here to present the business for us. Please go ahead.
Thank you. Quickly about myself, I'm Daniel, CEO since a bit more than a year and a half at Freemelt. I have a commercial background, both from IT and telco for 10 years, and then I spent 15 years in mining equipment. About Freemelt, so Freemelt is a company that started 2017. All the 6 founders did come from another successful 3D printing company called Arcam that was acquired by GE back in 2018. So by default, we have extensive knowledge about 3D printing and also within the electron powder bed fusion technology, which we are specifically in. 2019, we launched the first machine, which was focused on the research market, so universities, research institutes. And this was a part of the strategy as well, because 3D printing as such is a lot about to educate the market. It's been up for pretty much 30 years, but still it's a lot to educate about potential industrial applications. So here the intention was to really get the knowledge through the universities and institutes, through PhD students, to learn about 3D printing, to start to think about designing products from a 3D printing point of view, to also start to think from structure factories from a production point of view, from a 3D printing. And the first machine, Freemelt 1, launched only 2 years after. In 2021, then we went public, so listed at the Nasdaq First North since June 2021. The main focus and intention here was to take the next step. So when you start to identify new applications, then of course you need to have a machine as well that can manufacture these parts as well. So since then we have developed and now also launched our industrial offering as well, which we call eMelt. As I said, I've been here now for a year and a half. My part in this is the commercial side. We have still, as a company, we are very heavy when it comes to the technical side. But now we're starting to move more into the commercial side. I should say as well that we are today around 40 people. We are present in the US, in the Netherlands, in Germany, and then in Sweden as well. If we look into the past 12 months, then our focus has been to first try to establish a bit more of a long-term view. I mean, where do we want to be in 2030? How do we want to be perceived? So I put together a strategy that we're now starting to execute from as well. We also, I mean, we are based in Gothenburg currently, but our market is elsewhere. So of course we need to be present. We need to have people that understands the market, really understand how to do business in the different kind of markets. So that's also why we have implemented a regional structure. We have one in North America up and running. We have 4 employees in North America at the moment. And we have also the EMEA region, not present in APAC at this point. We have also moved more from the product development more into product management. So we have also recruited more commercial skilled competence from the product side. And also we're moving now more from mechanical engineering, electronics, etc., which has been the key part in developing the machines. And now we move more into software development as well. So I would say that now we have a scalable operating model in place to scale up this business as well. And I think we can start to see some results. I have a few examples that you can see on the screen, and also just for you to understand that we're not just selling machines. We work closely with customers, both when it comes to research institutes, but also the industry in how to develop new material processes, new applications, etc. So I think A&M Texas, the one that you see on the upper left side, which is within defense and energy. And US is an extremely important market for us. In the US, the industry work very closely with the research institutes and the universities. So here it's important for us to first establish our technology, and then secondly work with the universities to establish the processes and also the applications. So here we have a machine at this university, but we also work on a regular basis to develop for certain applications then within energy and defense in this case. Another one, the next one to the right is UKAEA. So this is the UK Energy Atomic Authorities. So they are an organization in the UK developing fusion technology, so fusion reactors. And here we did our first project during last year, which was very successful. And just recently we announced the second phase. So here it's really to develop components, and I will come back to it later as well, that you put into the fusion reactors, which of course has an extreme condition, so why just certain materials is possible there as well. And you can see here it says tungsten as well, and that will be a bit of a common theme today. The third one, I think all of you recognize, is Saab. So this is this Saab Dynamics, so the defense part of Saab. So here we are helping Saab to develop. First, we're doing a feasibility study in materials for potential application, which we haven't exposed, but it's within defense. And if they are happy with the results, of course, then the next step is to start to develop that application. And the third step is to start to manufacturing that product. On the bottom left here, we were quite proud in October last year when we announced a Fortune 500 company. Unfortunately, we cannot expose the name of them, but they're also in tungsten. They are a very experienced producer of tungsten applications. So here it's more about mass production type of application. And then IHI is a Japanese engineering firm. They have 2 of our machines, and you will see it later. I mean, we focus on 3 materials, but here it's a fourth material, so titanium aluminide as well. But they take the full responsibility to develop these processes, and if they succeed, and it's stated here as well, they would like to manufacturing aerospace engines or the turbine blades. If they are successful in this, then of course they need to start to manufacture, and then they need our products as well. So what kind of industry do we target? I mean, what kind of market is this? We're in metal printing, so it's some sort of part in metal that we focus on. To develop or produce parts in metal, it's a huge market. It's like 800 billion euro market. You can see here it says 8 billion euro, and this is more than for the applications where they have started to manufacture with additive manufacturing. So it's still, I mean, very small volumes into the total context. But that's also why it's a double-digit growth that we see here year on year and have seen for many years. At this moment, it's more of high-value applications and high-margin applications as well. But this is what I said initially. We need to educate the market about the opportunities and possibilities here. The team that started this company, as I said, they were coming from, they had an extensive experience of additive manufacturing. And what they saw, and I think also why the additive manufacturing side hasn't really progressed more, is that the focus has been more on prototype printing rather than mass production, which means that the cost to produce parts has been too high for the producer to swap from the traditional manufacturing to additive. So the aim that we have is now really to set the scene and really develop a product, but also a process that is so efficient that you can start to compete even with traditional manufacturing. So that's a key focus for us. We have sold 24 machines since the start. All of them are research machines. The good part with this is that we now have tested our technology because we use exactly the same technology regardless if it's for a research machine or for an industrial machine as well. So we have quite some good experience now when we're implementing our industrial offering as well. This has also taken us to become the number 2 in the world. So GE is the number 1. And we are by far the runner-up in this specific segment as well. Regarding our 2030 strategy, maybe to mention here as well. So here, and I will come back to it later, but if we succeed now with the strategy that we've put in place, we should grow substantially over the next couple of years. And it's mainly through the industrial side, and we should be able to be a 100 million euro turnover company by 2030. Also, I think it's important, as I said, I'm rather new. I think it's quite impressive. I was quite impressed about the direct gross margins that we have, despite the fact that we're a small company. So it's a bit more than 60% in gross margins. This is the only technology slide, so we keep it simple. But just for your information, so if we talk about metal printing, there are pretty much 4 main technologies. The powder bed fusion, which we are in, is taking more than 60%, representing more than 60%. Laser, though, is taking 90% of those 60%. And why is that? I would say there are a couple of reasons. First, Arcam had monopoly pretty much in electron powder bed fusion. And when GE acquired Arcam, and the main purpose of the acquisition was to secure their own supply of turbine blades for airspace engines. It hasn't been any kind of focus on EPBF in the market. But on laser side, it's between, I would say, 70 and 80 manufacturers or OEMs of laser products. Of course, they have been promoting their technology more to the market. So that's why we also need to take the role in educating the market a lot here. The other part now, I think now, if you go into technology, what's the difference between laser and electron powder bed fusion? So laser, it's you print in a room temperature environment. It's quite easy to modeling to print different kind of parts in an efficient way. But when it comes first, I mean, you have a laser, and the laser you point to a mirror, and you can just move the mirror in a certain kind of speed. For prototyping, not a problem. But if you're not going to step up into mass production, of course, then it's the first kind of challenge. The other part is if you need material properties. So if you're in sensitive applications, like in defense or in medical or in aerospace, etc., then you need to get up in temperatures to really get the right properties. And this is another challenge for laser. So an electron gun, you can move the electrons like 4 kilometers per second. So speed is one of the key benefits with our technology. And the other part is that we have a vacuum chamber, which means that we can also have high temperatures. So in our vacuum chamber, you have between 700 up to 1,400 degrees. So this is also why you can get the totally different kind of material properties on the parts that you're printing. And of course, I mean, it takes you also quicker up to the melting point. So again, from a productivity point of view. So here we have definitely key benefits versus laser when it comes to mass production. This is how our machines look like. So as I said, I mean, to the left, you have the research machine. It was actually the first open source machine as well in the industry. This industry is really a closed ecosystem where you need to buy machines, software, powder, and this is a true research machine. Now we have sold our first 2 industrial machines, which is called EMELT-ID, which stands for development. We have one within Europe and one to the US recently as well. And then the third step, so when you have developed your process, your application, you need to start manufacturing this. And then we have our manufacturing machine called IM. And that machine we expect to have installed in Q2 next year. The good part here for industrial customer is that they, of course, will like to, if they start to investigate in a potential new business, they would like to get to the market as soon as possible. And here, with our technology, as I said, we have the same core technology. You can actually get a very short time to market because you can utilize your time spent on doing the material process development, and then you can use that for your mass production in the end as well. So we work with three materials. We work with tungsten, titanium, and then copper. All these materials are beneficial for our technology. First, when it comes to tungsten, tungsten has the highest melting point in a periodic system, so more than 3,400 degrees. And as I said before, one of the benefits is that you can really heat up the materials in our vacuum chamber. And this is a brittle material as well. So this is why it's highly beneficial then to do it in a vacuum chamber. The other one is titanium. Same kind of thing there. It's like 700 degrees. And then copper. And copper, here we talk about pure copper. So here, purity, is that English? It's important to get no oxygen in here, because here it's connectivity that is important, which of course you get also in a vacuum chamber. And then when it comes to our research customers, they have no limitations. They can work with any kind of materials as well. So this is again why we try to, of course, emphasize our customers in research to also develop processes for other kind of materials as well. So we use them sort of like our influencers as well. When it comes to tungsten, when I started here, we had X-ray machines, because tungsten is good for to protect for radiation. But now, as you can see, now we have semiconductors, we have defense, we have energy, both in nuclear, but also in fusion as well. When it comes to titanium, three typical applications are orthopedic implants. And here, when it comes to implants, I think then 3D printing has really a key benefit to add as well, because here you can print the structure in the parts as well, which means it really can get integrated into your body in the best possible way. There's no design limitations when it comes to 3D printing. Then aerospace, I talked about. Space is also another one as well that is for titanium. And then for copper, just to mention three, we have space, defense, and also then the whole electromobility side of it. Just to give one example, so defense, I mean, unfortunately, maybe you can also say, but due to the geopolitical situation we have around the world now, it's an extremely high focus on defense. And, just to, if we zoom in on US, I mean, the whole world is spending a lot of investments here now. But the whole defense industry, they're actually in a situation now, they cannot supply the demand. So they need to find more innovative, more efficient solutions how to produce new type of applications. If I take the Department of Defense in the US, just to name one, they will only in advanced material research invest more than $400 million in 2025. And here, I mean, the materials that we are working with are highly let's say, beneficial or demanded in the defense applications. The other one is energy, and here fusion is also something that also, I would say, thanks to the geopolitical situation, now more countries are demanded to quickly ramp up alternatives when it comes to energy sources. As I mentioned, UKAEA, this one is ITER, another big project. And of course, yes, it will take some time before you have it in production, but there's huge investments now in the test reactors. Just to take the ITER one, I mean, they need more than 500,000 tiles of tungsten that you can see on the screen now. Because tungsten, as I said, has the highest melting point. We're talking hundreds of millions of degrees in the fusion reactor. And you also, the good thing with 3D printing, you can actually print in a cooling within the tile as well to even more protect to the heat. So it's actually demand now, regardless if the production going to be starting 2040 or whenever. The third one, and maybe the most mature from a 3D printing point of view, is the orthopedic implants. So here today, there are most of the big OEMs of implants are actually using 3D printing as well. With that said, it's only 4% of the world's implants in 2023 that was produced with additive manufacturing. So still, it's a huge opportunity to grow here. And the industry expect it will be a 5% annual growth. So from the 3 million hip cups, it's going to be more than 5 million in the next 10 years. So coming back to our strategy as a company, as I said, we go more commercial now. For us now, it's first we need to educate who Freemelt are. We need to educate on the technology that we work on. We also need to add more competence, and then we try to hire people from the industry, so we can also add and sell value. We need to be where our customers are. We need to be specific, not generic. So that's also why we set up this decentralized organization. And then last but not least, what's also important for us, we have a very transactional business as we speak, selling machines to research. And if you get into the industrial side, then of course the aftermarket business will be an important part for us. Our go-to-market now for research and industry will be slightly different. So for research, it's less value selling. Here, it's more that the university or the institute gets a budget, and you need to follow those public tender procedures. But when it comes to the industrial side, here we need to work much more with value selling. And here also now we are zooming in and actually changing our strategy slightly from focus mainly on maybe the orthopedic implants initially. And now, because of the demand and the sense of urgency, we actually swapping more to tungsten and non-regulatory tungsten applications, like in defense, for instance, in energy, to mention a few. As we're listed, so you have all potentially, you have access to anyway our financials. So as I said, we have a very transactional business currently, selling those research systems to the universities, which means it's also very difficult to predict sales as well, why you can see all these different kind of spikes. So to the left, you have more on the sales development. The delivery time as well is within 3 months. We can pretty much deliver on order as well. On the right side, more on the balance sheet, here we have done and are doing a lot of investment on the industrial side. But if you would remove those big investments, we have also actually done a positive operating cash flow 3 out of the past 5 quarters, which means that we have an underlying solid business. But of course, we have high ambitions than this. So our next steps now to really move more into becoming a profitable business and then to really grow volumes as well. So sales is important. So we definitely invest in sales resources. We need to get into the industrial side when it becomes more volume orders, aftermarket orders, etc. The gross margin, we're a small company, so of course we can also utilize more when we grow, also volume orders to get down the cost here as well. And then once again, aftermarket with even a higher margin can also help us to increase that part as well. If we look into our big investments moving forward after we have launched our product offering, then it's more people. It's mainly service people. It's people within in the software side, in the data analytics side, sales side, etc. And then from a cash flow point of view, so our business models that we're having when we sell systems is that we have a down payment of approximately 30%, and then 60% at delivery, and then 10% at the final acceptance test. So that's pretty much what I had prepared.
Yeah, very good. Thank you for that. Let's take some quick questions. So you mentioned a lot of these development orders and agreements with potential customers. Could you just explain to us what it's going to take to convert these into actual machine sales, and how likely you think it's that's going to happen?
Yeah, so typically it can be both. I mean, from a material research point of view, if it's a feasibility study, then of course first you need to make sure that the material properties are according to the expectation from the customer. If that has happened, then you go into an application development. Then you try to develop that specific application, and then hopefully, then if the application together with the material properties are according to the expectation for the customer, so they can make a business case and see that this is financially feasible for them as well, then of course they need to purchase the machine. And so it's difficult to say. I mean, sometimes it's like we're talking 2 to 3 months to do the feasibility study, and then application development, I would say maybe the same time as well. So, yeah.
Yeah.
And of course, I mean, we try to also step into these kind of projects where we see a high likelihood to get additional business later on.
Yeah, and beyond these agreements, can you comment anything on what your customer pipeline is looking like, both on the eMELT and Freemelt One side?
Actually not, but I mean, we have invested a lot in sales resources. I mean, we were more of a research company. I mean, a year and a half ago, we did act more ad hoc on customer opportunities. So during, I would say, second half of last year, we have invested a lot of time to really try to build up a pipeline, both on the research side, but mainly on the industrial side as well. So we should definitely see some results soon, and we start to see already.
All right. Thank you very much for that. That's all we have time for today.
Thank you.
Good afternoon, everybody, and welcome to this presentation with Carium. So with us today, we have the CEO, Christian Wallén. So please go ahead with your presentation, and we'll follow up with some Q&A.
Thank you, Oscar, and thank you for having me at ABG. We've been collaborating for a couple of years, and we've been very happy with the collaboration thus far. Hope to continue. And also fantastic to get to meet all of you to present our fantastic company for you all. And as Oscar mentioned, my name is Christian Wallén, and I have the great pleasure of serving as the CEO for Carium, which is absolutely fantastic. And before I dive into our business and our company, I'd like us to spend a little bit of time to think about the most powerful, yet most subtle revolution that is currently ongoing. And it's not the climate, it's not changing geopolitics, because those are very loud. It's the fact that all of us and all the people around us in Western society are getting older. It is completely inevitable, and it will happen to all of us and our parents. Quite a lot of young people in the audience here today. But what's so important about this change is the fact that it will fundamentally transform what Western society looks like. And why is that? Well, come 2060, we'll have 1/3 of the entire Western population above the age of 65. Now, you can be super healthy, able to do everything you'd like at the age of 65, certainly. But this is going to fundamentally change how we arrange our societies, our physical environments, how people vote, because we can see strong correlations between changes in political orientation across the ages. And we will have the issue of how on earth we are going to ensure that we can care for all these people. And it's easy to think that maybe in Southern Europe and other countries, this is a family affair where we have closer ties to our relatives and that we're very strangely isolated here in the north. But that is not the case. Already last year, around 1/3 of all people in Europe over 65, they were living alone. And there is a massive cost to society in caring for people at older age, seeing as long as they are able to stay within the confines of their home, the costs for care are at an acceptable level. But with these accelerating numbers, and just in the Swedish example, we know that the cost to care for a single individual increases by a factor of 4 if they go into residential care, and by 8 if we are forced to provide for them in more of a hospital-like setting. So this is what Carium is all about. It is about being a solution to what is this major challenge facing all of us, but it's moving so slowly that we barely registered it. And how are we doing this? Well, our vision is very, very clear. We want to enable millions of seniors to live really rich, safe, and fulfilling lives. And we want to do that by really innovative hardware, IoT solutions, sensors, and so on, that we can connect around the individual in a way that makes us more understanding of the situation, able to put the right efforts in if there is a need for support. Because you need the hardware. In this very digital era, we've forgotten that as we talk about data, we need to get the data from somewhere. And in this context, it comes from hardware. It's not on your phone. It's in your home and on you. Second, we work with leading software. This is everything from end-to-end cloud platforms for the management of sensor signals to involving the relatives to create a wider care circle around an individual. And last but not least, depending on what market we are in, we are also providing services ranging from manual labor and installation, operators in alarm centers, to emergency response personnel when we are contracted to provide that. So this is what Carium is all about, and our future vision is to serve as the nexus for connecting everything an individual needs, tailored to him or her, to be able to lead as a fulfilling life as possible. And that we can do with technology, smart data, and great services. This is what Carium is all about. And if we take a look at our industry, so to speak, somewhat affectionately called silver tech or age tech or care tech, or as we like to say, technology-enabled care. It is actually an industry that is growing in a very healthy manner, around 8% CAGR if we look somewhat to the future. And this, of course, has a number of really strong market drivers. The most prominent one is, of course, the changing demographics. But aside from that, there is also a really low level of penetration for these type of solutions and services for seniors in Europe. If we look at the powerhouse of Europe, Germany, we see that in the group of 65 plus, around 5.6% are currently using some type of solution of this nature. You contrast that to the UK, where that number rises to 16%. So we see tons of adoption yet to happen that has not manifested yet. In addition to that, you can always build so many new services around each and every installation and sort of customer endpoint. And the fact that a lot of the technology that's out there right now, in the UK, maybe around 60% of everything that is servicing people right now, it is on older legacy infrastructure, even analog wired networks that are continuously being switched out. Every country in Europe is gradually phasing out old connectivity and infrastructure. Sweden does away with 2G and 3G in this and the next year. Norway follows suit, same time frame. And that calls for new innovative products. If we look at the penetration levels in the markets across Europe, we can see that there are actually quite a few countries that have more of substantial, around 10% plus kind of adoption rate for these solutions. And many of the large countries, the Spains, the Frances, and the Germanys, they are actually around 5%, which is, of course, a really, really great opportunity for us. What's also very interesting is that the whole industry is actually segmented across services, hardware, software. There's plenty of areas to play in. And we are very fortunate to be playing in all of them as one of the 3 companies in Europe doing this. In addition, this is not just a sort of business to the public. It is in Sweden, certainly, Norway also. But in other markets, this is a B2B or even a B2C game. And we're also quite fortunate to be able to play across those dimensions. And if we look at the business, we were spun off from Doro, which was our original home in December 2021. For those that have followed us, you would probably say, well, it doesn't seem to have been such a great decision to do so. We'll get to the share price in a bit. But all in all, we are now a fairly stable and healthy company, a headcount of around 850 people. We've been growing, including acquisitions, quite healthily over the years. And we ended 2023 with around 824 million in revenue. Steadily improving margins and a fairly consistent split across the markets we are in. As you can see, if you remember the former map here, we are actually, with physical presence and commercial operations, where 85% of the spend within technology-enabled care in Europe is basically being allotted. So we don't really see the need to establish ourselves in Greece or the Czech Republic, but we'd rather stay very well where we are. Around 70% of our revenues come from a subscription kind of model, and the remaining 30% consists of direct sales of products. And this is, of course, our technology that we put in the hands of someone else to operate and use to service an end user, so to speak. And if you dive in a little bit further, the interesting part, I think, here is that across these 3 categories of offering, we deliver it in quite different format based on the market dynamic. And this is one of the reasons for why we might have great competitors in one market where we go head to head and learn from one another. Very, very few have actually managed to establish themselves in multiple markets across Europe, which we have. And the main reason for that is probably because all markets are very different. Some of them, like Sweden and Norway, they are pure play business to government, whereas others, such as Germany, it's just straight up B2B. And then you will also have your United Kingdoms, which are effectively all of these different segments at once. And all of them are healthy and growing, and you could potentially just compete in one of them and do really well. We have opted, with our size, being the third largest company in our industry in Europe, to go for all of them and to be really smart about how we enable our solutions to be functional, valuable, and relevant across all of this at the same time. Of course, it's a bit hard, but we seem to be doing okay. And given that we have a lot of analysts and financially skilled people here in the room, those that have been following us have probably noticed that we've had a steady upward trend, moving towards greater levels of stability across both revenue, our profitability, and also, to some extent, our cash flow. For those that have really dug into the business, you probably realize that if there's one challenge to our overall business model, it is the cash flow, but that is mainly a factor derived from doing business in the Nordics, because here we have sort of rental agreements for the subscription of services, and that means that if you do really, really well, your cash isn't so great for that year. Over time, it comes back to you, and it's a pretty good deal in the end. Our share, for those that have been following us, from our IPO in 10th of December 2021, I personally think it's almost a bit funny that the share price more or less reflects whatever it is we have done in the company. I don't know how it happened, but you can quite clearly see that we were on a downward slope following the IPO, because we were forced to deal with what it meant to be, you know, our own separate listed company. We had previously been a part of Doro, and thus we saw this major decline here. Over time, we have done all the right things in terms of getting commercial excellence and operational excellence in place. We have centralized a lot of the things that were decentralized and fragmented and thus very costly. And we're very, very happy to see that we are now almost back to the same share price where we listed and market cap also, whilst First North, on which we are listed, has dove sort of 46% or something like that. And these are figures from Friday, so I don't know if we're down 1% or something just for today. And throughout this, we've had really, really great owners who've been backing us. Sidro Förvaltning, the family office of Peter Lindell, who was part of founding Right Management, is our largest shareholder, followed by Accendo Capital, which is a Finnish activist fund. And third on the list is Nordea Funds. And if we look to the future, we see that we are now in a position where we are the company that we were meant to be following the split. Now it is time to become the company we were supposed to be. And to do so, we are going to focus a lot more on these major growth markets in Europe. For those that followed our Q1 report, you could see that our other markets, which is Germany and France and Switzerland and so on, it grew 80% compared to the prior year. And we're going to make sure that we are as successful there as we've been in the Nordics and in other areas. Second, and what I'm really proud of as we've done this turnaround, is that we've retained our investments and focus on R&D. So we come out of this period stronger than we've ever been, and we have tons of new interesting digital and hardware-related solutions. We just released our mobile social alarm, a small little unit that you always keep with you, which is packed with features with everything from geofencing to GPS tracking, two-way communication, and so on, which has been our fastest-selling product that we've ever released since it came out in December. So a lot more focus on the business-to-consumer market with products like this, and a lot more of offering our customers bundled solutions with our hardware and our end-to-end cloud software integrated in a smarter package. This is something that no other provider in our industry does really well, so we truly believe we have an edge there. And last but not least, for those that are looking, you realize that if you look at the metrics on how we're doing in relation to debt, we are actually down to quite low ratios. So one of the founding ideas of Careium was that this is a very fragmented market where you could basically build a very strong company with a lot of acquisition activity. And we are looking forward to go back to that agenda. And we think that it should be done in a very hard manner, which means that if we buy companies that basically do the same thing, we really integrate them for efficiency rather than allow them to be sort of freely managed, as has been the history in Careium, or rather in the Doro days. So for those thinking about investments into Carium, I think we were, in 2023, we were on one of the 10 best performing stocks on First North. I think so, at least. I think there are many reasons for why we're an interesting case. First of all, we have a really, really good market to work with. Most of it is not done yet, so to speak. Germany is sitting at 5.6% penetration in the 65+ age bracket. That's really interesting. What happens if they reach UK levels of 16%? Second is that we're a really, really strong position within this market. I'd argue that we are probably the most innovative, larger scale player and really appreciated for our quality, which is something, given the criticality of our services, that our customers really appreciate. It's also very, very good to be a Nordic company because you do business in a Nordic way, which is very, very appreciated when your main competitors have other business cultures. Third, we have around 70% in a recurring revenue model, which is, of course, very good if you are able to fund yourself from the bank and so on, and you can sort of predict that you have stable revenue coming in. With also having a lot of public counterparties, it's also very, very safe to take on a little bit of risk. So in that regard, this is another strength of our model. And last but not least, we are solving a societal problem. And we are doing so very, very well. And thus, an investment into Carium is also an investment into creating a better future for millions of people and also ticking off a couple of the global sustainability goals. So with that, Oscar, I thought I'd leave it to you. And I've asked Oscar specifically not to tell me the questions beforehand, because then it gets a bit better.
Perfect. Thank you very much. So just I thought I would start with going a little bit into the background. As you mentioned, you had, well, a pretty low profitability. You had a very big pressure on margins and cash flows, where you had leverage increasing so much that you broke your covenants. Sure. And then you've had a very impressive turnaround. So, but just going back, what makes you sure about, or how do you comfort investors that you are not going to see a similar case like we did in 2022?
Yeah. No, that's a very good question. I think that then you need to go back a little bit to why this situation emerged. So what was done in the Doro days was that you all know Doro, phones for seniors, really smart technology, really challenged, of course, by the iPhone and all those other great innovations. So at Doro, around 15 years ago, someone was smart and said, we're not going to have our future in phones. We need to find some other way of being relevant for our target group. So they decided on a broader scope on technology-enabled care. And what was done in the Doro days was that basically, there are many serial acquirers like the Storskogens and whatnots out there, but they did around 15 acquisitions to create this new business area, most of them really small. And that is what was known as Care within Doro, later becoming Carium. The problem here was that if you know your M&A, you know that a lot of the value comes from the integration, and there was absolutely nothing of that sort done. So when I came in, we had a situation where we had 5 legal entities in the UK that had not been rolled together. You had to have PwC come in and audit them and charge exorbitant fees for each and every entity. So there were a lot of costs related to just not putting things together. You have to run tons of payroll people just to cope with different schemes and so on. So a lot of what we did was about trying to, in a very, very short time, solve for that legacy. Getting the companies together, centralizing things, doing away with a lot of costly systems and putting everyone on the same sort of ERP plate, if you know what that is, the same systems for everything from financial control to stock management to what have you, to basically have a unified IT environment. This obviously opened up to quite a lot of redundancies because we did not need to double work things in a very high degree, and thus we could be a lot more efficient on the personnel side, predominantly in the UK, where I think the majority of the issues actually were. So we haven't done anything that I would classify as rocket science in terms of getting back on our feet. We've just done the things that sort of you have to do. What is impressive is that we've done them in a very fast time span. But that, I think, is not something that worries us in terms of looking towards the future. We feel pretty happy with where we've come thus far. And we do think that there's a lot more we can do that is a little bit more advanced rather than these basics that we've been occupying ourselves with good results. So I do not foresee any sort of issues in terms of going back to those kind of dire straits. What I do see is that I'd rather amp up some of the investments that we are doing, because I think we have a fantastic sort of runway ahead of us where we're in a very, very good position to capitalize on that.
Perfect. Are you just talking about growth then, which we hope can come from the investment? So you are alluding to around 8% market growth, and you're targeting 12 to 15% organic growth this year. So how do you feel about the competitive environment, and what makes you be able to outgrow the market in this way?
Well, the main reason for why we guide at 12 to 15% is that there are so many infrastructure changes going on right now. Sweden, Norway doing away with 2G and 3G. That means that you need to change a lot of equipment, which obviously drives a lot of sales for us. Same story in the UK, where they used to have the 31st of December as the date where they were to pull the plug on all analog networks, which 60% of the installed base runs on them. So they've now since postponed that a little bit and added a few more years to it. But we do see that it will be a very, very hot market in the product category. And our Q1 came in at 9.6, which I think in terms of growth, or 9.8, I can't even remember, which the market clearly appreciated, but we weren't so happy because we truly think that this can be a really, really strong year. However, we're not going to throw in any towels and say that, we're not going to have to change the guidance, because we do believe that this is happening. Then if it's happening this year or next year, we hope to be doing pretty well. So over time, I think it's maybe more reasonable, aside from acquisitions, just pure play organic, that beating the market and adding some, it's a quite reasonable target for a quality premium player, but these years will probably be quite strong. And the question then is, with the UK out of the way, with the Nordics out of the way, then you have a new timeline for France, which is set to 2030. You have Germany set for a similar time frame. So the question is whether this will keep rolling across the EU for a couple of or more years to come. Who knows?
Perfect. And just one last question. You talked about, the very impressive margin recovery, and that has stabilized, obviously, and improving cash flow. So the leverage has come down pretty sharply. And also now with the stability and the fragmented market that you are talking about, at least I think that, there should be a game of scale here in the market where consolidation can benefit a lot. So are you feeling comfortable now with the leverage situation? Are you actively targeting new M&A opportunities?
Well, I think you're right in the sense that we are in a very healthy space, perhaps too healthy, and we should probably take on more risk, if you will. But the founding hypothesis of Careium was to say, well, this is a super fragmented market. It should be some really good opportunities to get some of the best companies and get some scale efficiencies. That is still true. We do not see a situation where a PE-backed or similar entity has sort of scooped all the good ones up. Far from it. So we are very much hoping to get back on to that part of our strategy. And as I highlighted also, this is something where we feel that we do not need to buy super expensive, super smart technology companies. We can do that ourselves. But what we want to buy is more really well-regarded, well-performing service providers that we can make even better. So a bit boring, but I think it will feed itself in a very healthy way, setting up a good future.
Perfect. Thank you very much for that. I think that concludes this session.
Do you have any questions?
Okay, a warm welcome everyone to this next presentation here at ABG Investor Days. My name is Simon Granat and I work as an equity analyst at ABG, covering IT and technology companies, in which I also cover ForeSee, which we have the pleasure of hosting here today, and the CEO Jonas Jonsson. So for the coming 15 to 20 minutes, he will present the company, and then we will follow up with a Q&A session. So with that said, Jonas, please go ahead.
Thank you, Simon. And thank you, ABG, for hosting. It's a pleasure to be here. Thank you, everyone, for listening. My name is Jonas Jonsson, and I'll introduce myself in a second. But before I do that, I just want to take the opportunity to give you a 1.5-minute sort of crash course in what is ForeSee Strategies. So I'm going to let the film talk for itself here.
ForeSee Strategies is the leading provider of training readiness and organizational resilience solutions. For over 20 years, we've been working with mission-critical organizations, armed forces, high-profile international institutions, and global enterprises across 100 countries. Through our support and expertise, we can help you train effectively and be ready for the resilience challenges ahead. Using our innovative Exonaut platform to empower capability development and build on key insights for when it matters the most, while our experts work with you to prepare your operations for the future, allowing you to transform training, rethink risk, manage crises, and uphold continuity. With offices around the world, we are never far away. Be ready, be resilient, ForeSee.
So that's that's who we are. As I said, my name is Jonas Jonsson. I am the CEO of ForeSee Strategies. I've held this position since the 2nd of April this year, so I'm reasonably new. I've been with the company for a little bit over 11 years in a number of different positions, starting as a delivery consultant, working my way through sales and legal and so on. So working very close to our customers and very close to our software throughout the duration of my tenure in ForeSee, and really, really excited to take on this next phase of the journey, as I believe the company and our offering is more relevant than we've actually ever been before. So who are ForeSee Strategies? The name, it doesn't come from 4 different C's, it comes from foreseeing things, so it's a play with words. And what we do is we provide really 2 different things. We provide a software called Exonaut, a platform which breaches a number of different segments, and I'll come back to that. And we provide expert services. So we provide the combination of these 2 things to help our customers be prepared and also to help our customers act in situations that are outside of their control or situations that are unexpected. In terms of the software, we deliver these things both as a pure SaaS product, so something as a subscription. We host it ourselves. We can host in publicly hosted clouds and so on. We also, which is slightly more of a USP these days, we also provide it as what's called an on-prem solution, which means that the customers who have the requirements and the ambition and the need to host software within their own environment, be that firewalled off from the internet, completely standalone, or just want to be able to run their own IT infrastructure, we also provide it as an on-prem solution. And then thirdly, we provide it as what's called a hybrid for those who want a combination of the 2. So if you're running business critical or mission critical systems, you want to ensure that your operations don't go down even if your IT environment goes down. In addition to that, we provide and have been providing for the last 24 years now expert services. This is also something that is slightly unique, or somewhat unique, I should say, in the software business side of the house, where we sell the combination of the people who knows what to do with the software that we're selling and not just the software as such. And this helps us in terms of the implementation and the explanation to the customer as to the why they should be working with this. So what is this then? Well, it's predominantly within 2 primary verticals. So we work in the defense space with training and exercise management, and this is in the preparation stage for armed forces. We work with around 12 allied and NATO armed forces around the world, ranging from the US DoD through the UK, Europe, and all the way down to Australia. We work with these customers in terms of helping them define their military readiness. How prepared are our armed forces to act on something when they need to deploy? What is the state of readiness, both from a competence perspective and from a technical perspective? We work in what we call the organizational resilience in the public and in the corporate domain, predominantly also in preparedness, but also in actually working with the resolving of crisis. So risk management, continuity management, and incident and crisis management. And I'll come back to both of these sides a little bit as to why we see them growing so much. So two primary legs right now. Our defense segment, which is within training and exercise solutions, make up around 70% of our revenue. It is also very software heavy, where we deliver the software to the armed forces either directly or through partners around the world. So a couple of different organizations we're working with today, and we have been working with over the years. This is just a snapshot. There are lots more. But it's an interesting spread ranging from organizations such as Euroclear, which is obviously a clearinghouse, through Shell, where we work with them to help them in their oil spill response and large major exercises, as in how to be better prepared to handle those situations, through large NGOs and cross-government organizations such as the United Nations and the EEAS. All of these organizations want to collate and visualize data in terms of what is the status of the operations that we have running around the world, where are we today, and how prepared are we when something happens. And then when something actually happens, how do we manage that crisis? How do we manage that incident to not become a crisis? And how do we make sure that the right people have the right information at the right time? It's also interesting to see that we started off primarily within defense in the early 2000s. We then saw that there was a market requirement post 9/11 for a much increased risk management and crisis management, which we used to fund the journey of the company, which led us into the corporate segment through management consultancy. What we know is that working with the armed forces gives us a pedigree which we can use to approach the corporate customers, who actually in many times have a higher requirement when it comes to information security and when it comes to upholding critical business resources. When we're looking at where we are in the world today, so I'll start within our defense space and then I'll talk a little bit about the resilience side of the house. So as I mentioned, defense is big for 4C. It's always been big for 4C. It is the engine of our business in terms of our revenue. And we can see, as everybody's aware, that there is obviously global instability. We know that there are a lot of things going on, which is causing uncertainty and angst around the world. We can see that the defense forces within the NATO and allied countries are increasing their spend quite significantly. We haven't seen the outcome of this yet as a company, because when you increase defense spending, you buy things that you can touch, you buy things that you can see, you buy ammunition, you buy all the things that you're giving away to help Ukraine, you restock that, and that is the first thing you do. Once you've done that and you realize we're going to build capability for the future, we're going to build increased readiness. The Swedish defense spending has almost doubled towards the projections of 2024. All of that is supposed to go towards an increased readiness. Now we're seeing the results from that from our perspective in terms of them coming to us and say, how do we structure this training? How do we ensure that all the money that we're investing into platforms and into exercises around the world, that we get the readiness that we're required from the politicians and from the public, really? So focus on output-based military training and focus on realistic and simulated combat scenarios. So the combination of the live and the virtual and the constructive training and bringing all of that together, that's where our product comes in. And then there is a focus, an increased focus on digitization within the defense space. Our primary competitors to our software platform is either the Microsoft platform, so Excel or PowerPoint, but more often than not, a notebook, where somebody takes notes about how well they think that training went, and then they go and tell someone about it. Now, when you grow the size of your operations exponentially, you realize that that isn't a scalable solution to actually maintain readiness and to understand where you are. And the good thing from our perspective with all of this, obviously it's not good, the situation that the world is in, and you need to be very cautious when you're talking about these things. But from a company perspective, we've been working towards this for the last 20 years in terms of preparing that digitization journey for the armed forces with the armed forces of Sweden, Switzerland, UK, US. And we now have a product which is ready to go when the requirement is increasing at the pace that it's increasing. If we look at the resilience space, which is basically everything outside of defense, that can be large government organizations, it can be private corporations, finance industry, med, tech, all of those different things. We can see that organizations today, post-COVID, the word permacrisis is, it was a new word last year, it's still very valid. We're going from one large global disruption to the next one. And that is coupled with major and minor ongoing situations in respective countries and in respective corporations. And the answer, which was previously maybe okay to say, well, we haven't prepared for this because we didn't actually think it was going to happen, it doesn't fly anymore. It doesn't fly for CEOs, it doesn't fly for board of directors. Additionally to that, again, digitization. We were all told to go home during COVID. We needed to be able to share information. Microsoft Teams exploded. We all realized that that is a good product, but it's not a viable, secure incident management product. So the actual continued journey of that, to have that mobile crisis room and the information available for the stakeholders whereas you need them. All of that coupled with the rapid technological advancements. AI and machine learning today provides massive opportunities for us as a tech company, for us as a software company. But it also provides significant challenges for all of our customers in terms of deep fakes, in terms of fraud attempts, in terms of how do you actually ensure the information is what you think it is. And coming in there and making sure you have a structured process to handle these incidents is where 4C Strategies helps our customers. If we look at the numbers for 4C then, and you look at our slide earlier, a question we get quite often is, why aren't you bigger? Well, as you'll see next on the next slide, is we've done organic growth. We've done organic, self-funded organic growth for the last 24 years. We had a minor cash injection in 2016 to fund our US endeavor, but we have focused on reinvesting our profits from our managed services business into building our software platform. And over the last couple of years, we've invested heavily in doing that, into putting ourselves in the position where we are right now. Last year, we did 332 million Swedish in net sales. And over the last couple of years, we've had a growth of about 17%. As you can see on this slide, we had a little bit of a leveling out during 23 compared to 22. This is obviously not the trajectory that we were forecasting when we did our IPO during 2022, and it's not the trajectory that we are forecasting for the coming years either. The major challenge that we had during 2023 was the lack of a defense budget in North America, or in the US, I should say. Canada had one. But that meant that we were basically going down to 1/3 of our revenue in North America. And we struggled significantly with signing new deals. Now, as I mentioned, I started in this job in early April. I was announced on the 22nd of March. On the 23rd of March, the US Senate announced that they had now passed the US defense budget, which I appreciated a lot. That means that we're now in a position to move forward with all of those contracts. How long and when is a more difficult question, but we are obviously very keen on working with our team in North America to progress on those contracts. We can see also, when we look at the quarters, that we can get hit by quite significant quarterly volatility. And I bring this slide up because it's important to know, from an investment perspective into 4C Strategies, that this is something that's going to continue. We're obviously not hoping or forecasting the kind of numbers that we were looking at in Q3, but we know that they will go up and down and that there will be quarterly volatility due to the structure and the way that the defense organizations buy software and the way that they structure the deals. How do we mitigate this? Well, we grow the business, and with a growing business, the impact of these different individual deals will become less and less. And we're also seeing a willingness to change the way that they buy software to a degree, going from a previous model which was always perpetual licensing, i.e. you buy a license and then you own it, into more of a subscription-based with a rolling service and support agreement and so on, which will also mitigate the lumpiness a little bit when it comes to the quarters. They are going to continue, but we are looking at a decrease in impact in the future years based on a growing business at large, but also growing in the corporate domain, which has significantly less impact when you look at each quarter. So talking a little bit then about the future outlook, and I won't go into too much details, but if you look at where we are today and we look at the market, we can see that there is a continued increased requirement in the products that we sell, everything from risk management, continuity. There are new rules and regulations and international regulations and compliance requirements that are coming to increase organizations' operational resilience. And organizational resilience. In the UK, it's even called the Operational Resilience Framework. In Europe, it's called DORA. These are hitting the financial institutions, but also larger corporations working anywhere near that. That is going to come with a requirement for digitization. The ESG requirements coming into force now in this year and next year, depending on size, and so on and so forth, coupled with the increased defense spending and the uncertainty that we see in the world, where we are expecting the large defense forces of Europe and the US and the allies in the Pacific to continue to increase their spending for the foreseeable future. So how are we preparing for that? Well, we're working really hard to make sure that we are at the forefront when it comes to AI and machine learning. We have a good position in the defense market in that we have our corporate leg to stand on as well, where it is much easier to experiment and to use the technologies that are available, coupled with the internet and the open source applications, something that is much more difficult to do in the defense space. That gives us the edge because we can then move those across into the defense space. So we're really excited to see where we're going to land with all of these things, and we're really looking forward to continuing the journey with 4C Strategies. And as a new CEO, I think we're in a better position than we've ever been before in terms of our technical platform and in terms of what the market is actually looking for. So really excited to be at the helm of this ship, and really look forward to continue to update you guys on where we take the company future. And that's what I had today.
Brilliant. Thank you so much for that, Jonas. Let's continue with a couple of questions. Yep. So as you highlighted, you are relatively new, or you are new to as the role of CEO. Is there any specific things that you look to change that you would like to highlight, or is it more so continue on the same type of strategy that you have laid out to the market?
I think our overarching strategy in terms of our growth ambition and our continued global expansion still stands. I think internally in the company, it's a different thing where we're looking at optimizations, and when we're looking at sort of making some changes. It's natural when you change CEO that the organization is more open and receptive to change. So we're right now in the process of working our way through that. My key focus is looking at how do we bring our products, our software products, closer to the market? How do we streamline our expert services offer to ensure that it is the right thing for the market? As I mentioned, we come from a history of building the company funded by our managed services. And in some areas that may have held a little bit too much of a strong position. What we're doing right now is looking at optimizations across Stockholm, Malmö, London, DC, and how do we bring all of these things together to actually continue the transformation into a full-scale product company that we can grow exponentially and service a much larger number of software companies or software customers around the world.
Mm. And looking at the financial trajectory, we can note that the international business has been an outperforming segment, and you were previously in charge of that business. Is it possible to mimic that same type of structure to the other businesses, or what do you bring to the table here from that position?
To a degree, I think it is. We had the international segment, as we call it, which is a geographical breakout of the company, basically meaning everything that isn't Nordic or North America, has performed really well over the last 5-6 years. I think what we've been able to do right there is to identify the right areas in the market and to do that market penetration and to actually provide our products as a COTS product to the ones who wants to buy them. The upside in that market is that obviously it is a huge market. So you don't have to, you can be a bit pickier when you choose your customers, so to speak. What we also saw as an advantage there was that a lot of organizations during COVID got used to actually buying and implementing software without having all of these face-to-face meetings and without having long whiteboard sessions about what workflows are we going to do and how. So I think that it opened up for an opportunity to be more efficient. So obviously I'm looking at now how do we bring that team into the core of the business, and how do we scale in the same way, focusing on pre-packaged products and focusing on scalable software, because there is a significant market out there.
And I'm sure you can argue that Sweden joining NATO is a tailwind. Is it possible to give any concrete effects from this happening?
It's definitely a positive. I mean, all of the European countries joining together in NATO is something that we see as a very positive. We have what is called a NATO accreditation, which means that our software is accredited for use both in the unclassified environment and secret environments in NATO, which gives us a much shorter path to be able to start using the software compared to most of our competitors, which is a good thing for us. In terms of the Swedish accession, it's a really positive thing. It's something that is talked about in a number of different areas, and we obviously bring it up as a Swedish company. It allows us to use our Swedish staff in a much easier way in NATO and other countries' projects when it comes to security classifications and so on. But I also think from our perspective it opens up a bit more market potential in Sweden, and in the other Nordic countries. Finland and Norway are following suit as well. So it's very positive. It's a bigger thing in Sweden than it is in maybe other NATO countries, but we're obviously very happy about it.
And you touched upon it during the presentation, but what could you say is the status in the US? Because it has been an important growth driver historically, and it has recently taken a downward trajectory.
Yeah.
But the outlook, I guess, is relatively positive. What is the status here?
Well, as I mentioned, during the larger part of 2023, there was no defense budget. And when there is no defense budget, it means in the US that they can continue doing what they're doing, but they can't do anything new. So that obviously constrained the business. What we did was that we looked a little bit at how are we positioned, how are we structured in the US. We announced last year that we've appointed a new vice president or president managing director over there who's running that business. We achieved what's called facility clearance, which means that we can work directly on classified contracts in the US. This is a process that takes a number of years to achieve. And we also appointed a new external board with very senior US previous officers and corporate officers to be able to help us out on that journey over there. In terms of when are we going to see all of this come to fruition, that's a slightly more complicated question. There are a number of companies who are standing in the queue outside Contracting Command right now trying to get to the money that has now been released. But we are working together with our partners and also directly with the DoD to be able to progress. So when we closed out 2023 and also when we closed out Q1, we looked at, and I looked at it, and you could see that we had 2 of 3 out of our 3 segments working in a positive way. So we had strong growth or really strong growth. And then we had one which wasn't really functioning to the way that we wanted it to, but we knew why. And the primary issue with that has now been rectified. So I'm less concerned with that situation than if it would have been an even spread across the 3 of them. When are we going to see all the big announcements? Difficult to say at this point.
I guess it's sort of out of your hands. And what you have done in recent years is to invest in the product portfolio by quite a lot. Do you see more investments happening in the near future here, or how should we think around cost? Just shortly, because we're running a little bit of a
Yeah, I'll be very brief. So I think from our perspective, we've invested heavily in the R&D department over the last 3 years. Really heavy. We've done a full tech transformation on the back end. We are now almost at the end of that transformation, so we have the platform that we need. We're not going to see the continued growth on that level. We're also not seeing any major sort of cost-cutting programs coming in. That's not what we're looking at. But when we're going to invest in the future, we're going to invest in sales, we're going to invest in go-to-market, and continued global expansion, selling the product that we've now developed.
Fantastic. Thank you so much for attending here today and all the rest here. And with that said, we'll end this session. And yeah, thank you so much.
Thank you very much, Simon. Thank you, everyone.
Yes, so good afternoon and hello everyone and welcome to this presentation by MT Højgaard Holding. Some of you might remember MT Højgaard for the last time that we had the Investor Days. It's Denmark's second largest construction company. The company has three divisions. MT Højgaard Denmark, which is the primary construction and infrastructure building company. Inga Petersen, mainly focused on renovation, but also construction, and then finally the smaller project development units. And finally, the company is also divesting its international operations, which I guess Rasmus Untidt, CFO, will touch upon in this presentation. The share is up 64% this year, and this is mainly due, as I see at least, to the strong financial performance, which is large an artifact of Rasmus Untidt, which has been with MT Højgaard for 10 years, but the last 18 months as a CEO. So with no further ado, Rasmus, the floor is yours.
Thank you so much, Peter, and thank you, ABG, for giving me this opportunity to present today. My name is, as Peter said, is Rasmus Untidt, and I'm the CFO of MT Højgaard Holding. I'll start the presentation with a brief introduction to the group and our investment case, followed by an update on our strategic transformation to become a leading player in the construction industry in Denmark. I'll then focus on our core business in Denmark and provide a snapshot of current trading as well as our key focus areas before taking your questions. Please turn to slide 2. Slide 2. MT Højgaard Holding is a Danish construction. Go back to slide 2. I think you're on slide 3. Yes, thank you. MT Højgaard Holding is a Danish construction group with a history dating back to 1918. It's been involved in a number of landmark construction and infrastructure projects over the years. Today, our group is comprised of around 3,000 employees and 3 business units focusing on the Danish market. MT Højgaard Denmark is our largest business unit, covering construction projects, civil works, and infrastructure. Our other large business unit is Inga Petersen, covering construction projects and holding a strong position within refurbishment and a solid foothold in building services. The third unit is MT Højgaard Property Development, which is focused on developing, specifying, and realizing sustainable commercial and residential projects. This is our Danish core business, which has grown profitable for 5 years in a row now. In our view, this makes MT Højgaard Holding an interesting investment case in a market that has been impacted by COVID-19, inflation, interest rate hikes, and low visibility. We've been around for more than 100 years, and we are on track to deliver the 6th consecutive year of growth and improved profitability in our Danish core business. We have successfully navigated COVID-19 and mitigated the impact of our industry of severe economic shocks in the wake of the pandemic and geopolitical turmoil. We have delivered solid performance while spending considerable resources on building a new, leaner, and more focused group. These efforts have included several divestments in Denmark and abroad, as well as restructuring our core business. We have seen good results from these efforts, and we are taking important steps to sharpen the group profile. Our key competences and core focus areas are well defined, and we have established a unique position of strength in carefully selected parts of the Danish market, which are less sensitive to macroeconomic volatility. We are continuing this path to drive stable performance and reduce risk exposure even further. The strategic target is to become a pure-play construction and civil works company with a leading position in the Danish market. We see interesting perspectives and growth opportunities for our business units and a strong outlook for MT Højgaard Holding. And we are pleased to report that we have built a solid foundation for pursuing these opportunities through sharp focus on our cash flows and balance sheet. Let's flip to slide 3, please. Thank you. In October 2023, we decided to focus exclusively on our Danish core business and wind up our international activities. This means that the international business is now classified as discontinuing operations. We made this decision to streamline our business and ensure that we are spending our managerial and financial resources in areas where we have a competitive advantage and prospects for even further profitable growth. Since the decision was made, we successfully divested RTS contractors in the Faroe Islands and left this market. We also sold part of our activities in Greenland, focused around the Thule base. And we are pleased to receive approval from relevant competition authorities and the first installment payment for the sale of SET with activities in Africa and Portugal. We are awaiting the final bank guarantee and look forward to closing this deal as well. With the progress made so far, our international activities are now limited to Greenland. We are still in the process of divesting the remainder of our activities in Greenland while finalizing the last remaining projects. It's an airport in Nuuk expected to be handed over in the second half of the year. Sale processes are ongoing, and we are seeing interest from potential buyers. We still expect to be able to have the international business wound up during 2024. Let's turn to a brief overview of performance in the Danish business. Slide 4, please. We reported our Q1 figures last week under the headline of continued profitable growth, based on 6% revenue growth and a 69% EBIT growth from the same quarter last year. Performance was in line with our ambition of growing earnings faster than revenue, and we were pleased to continue the positive developments highlighted on this slide. The solid traction in recent years has been secured in a market impacted by several shocks, resulting in no overall growth in demands currently. Still, there are pockets of growth in the Danish market, and we are well positioned to cater to these areas. We remain focused on delivering profitable growth and executing on the winding up of our international activities, and we are pleased to have a strong order backlog. Let's take a closer look at that on slide 5, please. Looking ahead, we see a strong order book, which grew to a high level during 2023, based on several small and mid-sized orders combined with a few very large orders. The order book has since declined since the all-time high last year. This was expected, as we do not often book orders in the billion kroner range every quarter, and because we saw several orders in tenders and partnership agreements being pushed into Q2. This includes an 8-year partnership agreement with Siemens Energy announced yesterday, comprising of expansion and renovation of the electricity grid in Western Denmark. At the end of Q1 2024, the order book stood at 12.5 billion Danish kroner. The order book is comprised of firm unconditional orders. In addition to this, we had orders worth roughly 1.4 billion, which has been rewarded but not yet contracted. And we also have future activities with an estimated value of 5.3 billion within construction partnerships. Finally, the JV category contributes with a value of around 950 million Danish kroner. In total, our order portfolio exceeds 20 billion Danish kroner and forms a solid foundation for our activities in the coming years. This enables us to plan and optimize our resource allocation, making us less vulnerable to fluctuations in the market. Please turn to slide 6, please. We have improved several financial ratios in recent years, and we maintained focus on cash flow and balance sheet in Q1. We reduced the group's net working capital by 594 million Danish kroner because we're improving our ability to collect cash and phase our projects to quickly receive payment for our work. After positive developments in recent quarters, we saw a decline in cash flow from operating activities in Q1 due to tax payments and developments in working capital. The return on invested capital increased from 26% to 69% on the back of improved earnings and a reduction of invested capital. Finally, we reduced the group's net interest-bearing debt by almost 2/3 billion for a net deposit of 207 million Danish kroner. This improvement was driven mainly by a doubling of cash in hand to 821 million Danish kroner. Based on our relentless focus on cash flow and balance sheet, we are making significant progress and creating a greater financial headroom for the group. Turn to slide 7, please. We launched our Building On strategy last year, focusing on gaining strong traction in our market and delivering tangible progress on the sustainability and people agendas while generating profitable growth and sound returns. On the next couple of slides, I would like to highlight some of our most important strategic focus areas and how they impact our approach to the market and the prospects for future profitable growth. Turn to slide 8, please. Slide 8. On key focus areas and strongholds for us is strategic partnerships and integrated collaboration projects. We are the leader in this area in Denmark with years of experience for multi-year strategic partnerships with several large council housing organizations and public developers. Under these agreements, we cooperate closely with developers and other advisors on a portfolio of projects. In addition to the fully fledged partnerships, we have entered into large-scale framework contracts, dialogue-based and phased tenders, and we see an increasing number of projects with early involvement as well. 37% of group revenue was generated from partnerships and other collaboration projects in 2023, and we have won the first new partnerships with private companies as well. We currently have 10 multi-year partnerships with private and public partners. These types of collaborations ensure a higher level of robustness and contribute with increased stability and visibility. It's a great way to ensure efficient construction process and delivering projects on scope, on time, and on budget, and it reduces the risk of conflict. We haven't been involved in the disputes in partnerships or cooperation projects so far. Another focal area is the civil works and infrastructure segment of business in MT Højgaard, Denmark, which diversifies our portfolio and fosters greater resilience and stability in a challenging market. We aim to further expand in this sector following robust growth in recent years. This was most illustrated by the electricity grid expansion order announced yesterday and mentioned before, as well as our work on the Port of Rønne and the large Nordhavn tunnel project in Copenhagen. The activity in civil works and infrastructure is quite resilient and driven by public investments in the green transition, energy projects, climate adaptation, traffic infrastructure, and waterworks. In MT Højgaard, Denmark, we saw civil works and infrastructure accounting for 42% of revenue in 2023, and it is worth noting that a significant part of our activities in this area are done under joint ventures, which means that neither order intake nor revenue is reported separately in our accounts. On this note, please jump to slide 9, please. The next area I will point out is sustainable construction and refurbishments. We have been a frontrunner in this segment for years and are seeing increasing demands for know-how about recycling, waste reduction, materials, and flexible construction, among other things. The number of sustainable certified projects has increased steadily for years now, and 37% of revenue came from cases with sustainability certification or pre-certification in 2023. Today, certification is a key topic in conversation with developers. Tomorrow, it will be completely integrated and an actual part of all projects. We are targeting a significant 16% reduction of CO2 emissions in 2025 from the 2022 level, and a 42% reduction by 2030. At the same time, we are focused on implementing the EU CSRD into our strategy to ensure compliance, continued progress, and a higher degree of transparency. With these perspectives on our key focus areas, let's turn to slide 10, please. As mentioned earlier, the Danish core business has generated growth and lifted earnings for 5 years now, and we are on track to make it 6 years. We have improved cash flows, return on invested capital, and other financial ratios in recent years. A fair share of the progress has been made on the back of a strong turnaround effort in MT Højgaard, Denmark, supported by a stable and high level of performance in the 2 other business units, even during COVID-19 and a slightly depressed economic cycle in the Danish construction industry. We have a broad foundation with around 300 current construction and civil works projects. The geographic distribution is good, with a mix of small, mid-sized, larger, and a few major projects. We are proud to say that we are the leader within multi-year strategic construction partnership with large customers, and we have strong position in other collaborative projects, refurbishments, infrastructure, sustainability, and construction works in general. The Danish core business is well positioned with a high order backlog, a promising project pipeline, skilled leaders and employees, as well as a strong exposure towards the most attractive parts of the market in terms of growth perspectives. Over the last couple of years, we have spent resources on strategic restructuring, and we are now parting with the business unit MT Højgaard International. This restructuring has taken its toll on the group results, but we are now reaching the very core of our business. We will focus entirely on developing our core business, which still holds potential for improvements. and new strategic initiatives will contribute to the strength of MT Højgaard Holding and our ability to continue in delivering profitable growth. On that note, please turn to slide 11 and the outlook for 2024. We expect to generate revenue of 10 to 10.5 billion Danish kroner in 2024, and around 85% of this was contracted end of March. In addition, we have several orders expected to be contracted during 2024 and a continued strong pipeline. Earnings are expected to increase, with EBIT expected to reach a level of 400 to 425 million Danish kroner. This would be an improvement from 389 million last year, and we expect earnings to be higher in the second half of the year than the first half. All three business units are expected to improve slightly and increase margins. MT Højgaard Denmark is already improving, as mentioned before. Inga and Petersen, we are more dependent on booking new orders and improving execution. And in MT Højgaard Property Development, we expect to see the usual developments with earnings materializing towards the end of the year when projects are realized. We maintain our focus on profitable growth across the group with a clear emphasis on profitable. It is our ambition to increase earnings in the continuing activities for the 6th year in a row. Please turn to slide 12, please. Before I end this presentation, I just wanted to share a few points about the MT Højgaard Holding share. We are listed on Nasdaq Copenhagen and have roughly 3,000 shareholders and a market cap around 1.5 billion Danish kroner. In addition to ABG, the share is covered by an independent equity analyst at SEB and followed by Danske Bank. Our major shareholders include various entities and private individuals associated with the two original owner companies. In addition, several Danish institutional investors are represented in our ownership along with retail investors. Free float is around 40%. We are focused on creating value for our shareholders based on the restructuring efforts outlined today and through continued improvements of the core business. We are confident that these initiatives and continued strong performance in Denmark will unveil the value of our group and enable us to distribute excess capital to our owners in the coming years. It is our main priority to resume dividend payments as soon as possible. I now look forward to taking your questions on this call and any follow-up questions after this session. And please feel free to reach out. Let's turn to slide 13, please.
Thank you very much, Rasmus. And talking about the share, maybe we should stick to, let's say, one of the main drivers behind the share price performance and this sort of the financial performance, particularly the strong cash flow development. So if you look at it, last year you had a very strong improvement in cash flow due to your working capital process. Sort of looking at the headline figures for this year, if you maintain your guidance of 400 million in EBIT, and let's say roughly 100 million out from the international operations, we are at 300 as a base starting point. Could you just talk a little bit about the pluses, the swing factors from 300 plus minus to give us a sense for what kind of dynamics and moving parts there are for the cash flow for this year, please?
Yeah, ever since I became CFO of the company, and I have to say I was the chief strategy officer prior to becoming the CFO, I've always been very focused on cash conversion. And this means I look at the finances horizontally. I'm very focused on the balance sheet, not only on the P&L. We expect to continuing this level of negative working capital we've seen in the past year and a half. That's our focus. We focus on face our projects better, get money. Our work in progress is important, and this means that the way we face the projects, that we get money prior to doing the work is ideal for us. And when we then do the work, if we haven't had the money up front, it's important for us to bill the customers and get the money from the customers. But at the same time, we have a lot of respect for our vendors, and we pay people on time. But we are very focused on our working capital. And again, our invested capital, looking at the other part, is also important. And this is where joint ventures helps us quite a lot. When we go into big civil works projects, we quite often do it with international big partners. so we don't have to invest big amounts on equipment, and that's another thing. So I believe that we will see the working capital we've seen last year. We will reach some point of steady state, a little bit below what we saw in 2023, but not far from. And if we look at the Q1 for 2024, we had a negative working capital of 650 million compared to end of 2023, where it was 669 million. So it's roughly in the same neighborhood.
Okay. Yeah. So thank you. So let's dwell on, let's say, just a couple of the sort of negatives that the market focused on in your Q1 report. The first one was the international operations, which surprised a bit. Could you just put a bit of flavor on that and just explain what we should expect for the full year and when that is recorded, if you can at this point in time, nevertheless, and then sort of the outlook to sort of guarantee that that's out of the books, sort of.
If we look at it in Greenland, we have an electrical company, a technical company that we have up for sale, and we have dialogues with interested parties. I don't know how much money we will gain from this transaction, so I can't really tell. But in terms of MT Højgaard Greenland, where we only have one project left, that will be done this year. We have seen an unfortunately loss in Q1, but that was because we had to force the work on the projects, and that cost us money. We will continue losing money. I think we had, I know discontinued business for Q1 was minus 68, and I think it will be, or it will be more than 68. I cannot fortunately promise that, but it will be less than we had in 2023. What I focus on with the international businesses, I'm very happy that we have actually decided to sell it because it was actually diluting the very, very good Danish business. And now we are in the core. We are in a market, that's the Danish market, where we have some competences. And we are working in the core. We look at the adjacent business, and we have a focus on new business, but the main issue is core business and adjacent. So that's why. But we will lose money on international.
The second item was sort of the relatively low order intake. I mean, you've already spoken about the very high comparison figure from last year. But I think the interesting part here is sort of the dynamics in the market where you are staying away from what is perceived or what is a very tough competitive situation in Denmark. So two questions on that for the audience. One is, of course, the focus on your order book quality, which also hits the order intake, and then a brief, description of the outlook and the market situation in Denmark currently.
First of all, having a solid order book, it gives you some kind of freedom. And a key thing in our company is financial discipline. I think discipline is key for a construction company, or it is for all companies. This means that when we look at orders, we don't go low. We are very selective in what we order or in what we bid on. In terms of what type of business it is, it has to be attractive for us, and we have to have the ability to win and earn money on it. And this means that we are very selective, and that's one reason why we have seen less order inflow this quarter. Of course, we can't continue being this because then we will cannibalize on our order book. But we are very, very careful. And the good thing is we're working on our cost base so we become even more profitable or even more competitive in the market. We are looking into an interesting market, especially the civil works. It's very, very interesting market. It's a little resilient towards the fluctuations in the economy because we see a lot of its public funding. And we have established us and have a fairly good position in that area. So we see the market, we see it positive. Also, the partnerships we are engaging in are really giving us a solid ground on our financials. So, to some extent, a little positive on that note.
Thank you. And if we sort of look a bit ahead as well and stay on the Inga and Petersen division, which is highly involved in renovation work.
Yes.
Could you just give us your sort of high-level views on the impact of the EPBD, the European Performance of Buildings Directive, which was approved last month in April, and what you sort of see that having an influence on your business, and what you see that it takes for it to actually have a real impact in the market and for you to benefit from that?
We are actually we are a quite big company, and we follow all the guidance coming from the EU. And being a public company, we are getting hit first by all the new initiatives. We see it as a good thing, and we believe. I'm so sorry. I have an alarm going right now. Sorry. We do see it. Sorry. We do see the directive as a positive thing, and for E&P with all the refurbishments, we are quite confident that they can actually turn it around to something good. Inga and Petersen, as I said, need orders, and that's because E&P is very strong in partnerships, and we have unfortunately seen in our partnerships some delays because it takes a longer time. We do have the order. It's just it takes a little bit of time to executing on the actual order and get it signed so we can actually begin the work. So I don't know, Peter. I'm sorry. It's because I have an alarm in my right ear. I'm sorry.
No problem. I guess we are also actually reaching sort of the top of the hour here after 25 minutes. So unless there is a spot comment for question from the floor, then I think we will. And I guess there isn't, so I think we will stop here. Rasmus,
thank you so much.
You have to move forward to another meeting, but nevertheless, thank you very much for taking your time to participate, and we are very happy to see you, and look forward to follow up on the MT Højgaard sometime in the future.
That sounds great. Thank you so much.
You.
Have a good day. Bye.
You too. Cheers. Bye-bye.